what they're worried about with higher interest rates slowing down the market. But there's government spending. There's long and variable lags in government spending still working its way into the system. There's a bunch of money unspent by the U.S. government. 56,000 jobs a month they average in 2023. There's your problems with inflation.
Okay. I think we can conclude the big thing for this is kind of eliminating main crucial point.
All right, let's get started.
The jobs to get that March timeline of a cut. Fair?
Exactly right. The data has to show progress coming down. Like I said,
Yeah.
so Jerome Powell can bracket it on the way down. 4.1 year over year did not do that. No
200, what was the final number?
216.
216. Giving me a break. Talking about cutting it out. That's the thing. All right. Thanks, Kevin. Let's bring in Liechtenstein. And look at some of the charts. What do you make of the bond dollar move right now, Ben? I mean, bonds are selling off pretty hardly, but the dollar has basically retraced its knee-jerk reaction to this report.
Yeah, for the most part, Oliver, the initial moves that we've seen have been retraced, and I think it kind of you get that initial spike in reaction to the data and the thinly traded market, and then as some of the information gets digested, and I think more level heads prevail, you see a more real reaction too. But for the most part, the S&P is hanging out right around 4720, basically the same area where we were into the number. I think you bring up a couple good points there, Oliver, how employment has not necessarily equated to inflationary pressures, strong employment that is, and you've seen that, right, in terms of reflection of the indices and how they responded to some of the stronger than expected data here over the long term. This will look at the short.
Good morning. Good morning, sleepy children. Let's see. Let me get this squared away for our buddy Rick. So technically, we are in a risk-off situation until we get back above 4,700. Okay, let's get this squared away. Let me get Thinkorswim up. Done. Let's get, what's Bitcoin doing? Bitcoin. Okay, Bitcoin. Trying to continue higher with the approval. I believe the approval is a done deal now. Let me see what Mondo said yesterday. At the close yesterday, I saw some comments. Sources report, that was actually Russell. Thank you, Russell. Sources report that Bitcoin spot ETF is going to be approved by the SEC for multiple firms' applications. News expected today. Senior reporter over at TechCrunch. Okay, watch Bitcoin. The dollar continues lower. Good morning, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Friday, the 5th of January. I'll be with you here all day until around 4 p.m., giving you the play-by-play. Currently, we are in a risk-off mode. Okay, S&P needs to get back above 4,700 and stay there. Yesterday and Tuesday, we told you that we needed to stay above 4,700, Tuesday, Wednesday, Thursday. Today is Friday. And a couple of things I wanted to share with you. What I'm doing presently, okay, some of you might be buying puts on the indices. Let me just get squared away here. Delete that. Delete a few things here. Got too many examples that are no longer applicable. Okay. Oh, wow. Got a lot of stuff here. Good morning. Good morning. We have about 11 minutes to go. 11 minutes to go. First 15 minutes, I'm not doing much of anything except taking profits off the table, analyzing the markets, reassessing current conditions. Currently, we are in a risk-off mode below 4,700. That means I'm not going to be doing anything for at least the first half an hour, 45 minutes, except managing existing positions. Okay, that's Amazon. Today, there we go. That's LABU.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. They're not nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Okay, I don't want that. We've got 9 minutes to go. All right, with the let's see, let's go to Apple, for example. Apple is currently trading down there at 181 and change. Apple 181. So what I've been doing lately is to trade bear call spreads. A bear call spread. You can see down at the bottom center where current price was at the close. I want prices to move lower. So I want Apple to move lower or stay below. Let's see, stay below, basically stay below my sold strike. If you look up at the top, you can see the red highlighted area. That's the strike that I sold, 195. So we're here 14 points below the strike that I sold. So the likelihood by February 16th is that we'll be below 195. So I sold that and I bought the 200. I received the credit. Now this is as of today. So I did this 2 days ago. Actually, it was Tuesday. And I got $1. I think it was $1.35 credit. So $135 per contract credit. So I keep that credit so long as price stays below 195 by February. Now, the 2 weeks before that expiration, theta really starts to kick in. So really when you're thinking about the last day of January, first trading day of February, because by that point, if we're still below 195, we should see a lot of the theta or premium that has leaked out. In addition to my credit, I'll keep 100% of the credit. So you can see it loses $4 a day in theta. Item number 3 at the top right. Theta is telling me that the strike I sold is losing $4 a day. The probability of winning is delta, or really the probability that I won't have to manage this aggressively is about 81%. So at 19 delta, you just take the opposite of that, and that's 81% probability that I'll be okay and that I'll receive the credit. That's what I'm doing currently with Apple moving lower. Okay, you can see Apple is moving lower. The 195 is a strike that I just showed you that I sold. Okay, and the strategy is I think Apple is going to stay below, just consolidate. And over the next few weeks, I'm going to hold on to my credit and I'm going to get some theta, $4 a day, as well as the implied volatility, which now is only about 20%. It was top right corner. You can barely see it. It's cut off right there. IV is right to the right of Vega, which is important too. But the implied volatility is now 20%. It was about 35% when I sold these. So that 15% in IV has leaked out of the shares that I sold to somebody. So anyone buying those puts lost that value. I gained it in the time that this trade has been on. So bottom line, I'm looking for Apple. Maybe just stays in this area. That's fine. If for some reason this starts to move a little bit further, I can put another trade on, maybe 2 weeks out, that is at a lower strike. Maybe I sell the 185, 190 and buy the 190 for another credit as Apple continues to move lower. The idea is I want to sell premium calls overhead because I think price is going to move lower. Now, if it starts to bounce in the other direction, I got time. I still receive the credit. I'll keep the credit. Maybe I just keep less of it. So there is the probability that 15% of the time I might have to aggressively manage the position. Right now, there's 81% probability that I won't have to actively manage. So what does that mean? It means that I can come in, if I got a day job, I put on a credit spread on Tuesday. I come in, I look at price and say, there's no way it's going to get to 195. I'll check it at lunchtime, but I don't really have anything to worry about. That's the power of credit spreads. Okay. Now, with respect to Netflix, I have the opposite. I'm looking for Netflix to continue to push higher. I sold a put credit spread. So I'm looking for prices to move higher on Netflix. So that's what I'm doing currently. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Friday the 5th, the first full week of trading for 2024 is in the bag. Well, it will be in the bag by the close. Right now, we're looking for price action to get back above 4,700 by the open. We got 3 minutes to go. 3 minutes to go. You can hear Woody clicking away in the background. We're well off of the worst levels after the non-farm payrolls number came out hot. I think it was, what was it? Let me go see real quick. Non-farm payrolls. Non-farm payrolls were hotter than anticipated. Where's Russell's comment? Am I looking in the right place? Where'd everything go? Well, non-farm payrolls came in hotter than expected. Yeah, that's the whole thing. That's the whole, yeah.
According to the Hezbollah head, he says the US is expanding the war in the region through its attack on the Yemeni Islamic resistance in the Red Sea.
All right, 3 to 5% is normal.
Want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer for Financial Juice Pro for a year's worth of our service for the price of 1 month. That's save 92%.
Okay, NVIDIA looking good. All right, so that's good. All right, we got less than a minute to go. Less than a minute to go. You know what I do the first 15 minutes. I don't have to repeat myself. I'll wait until about 10 o'clock at the earliest to do anything. I'll be managing existing positions, but I'm not going to do anything unusual. You can see the current positions I have here. Okay, Netflix, that trade I just showed you on Netflix is up 71%. 71% on Netflix. The Apple trade is up nearly 20%. Okay, and we're open. And they're off. Okay, let's see. Apple, I'm looking for that to fade a little bit more.
On open imbalance, 20 million to the sell side.
Okay, so, all right, S&P. We want S&P to get back above 4,700. Okay, so not too far away. Let's see if they find this attractive. We are risk off mode. We are currently risk off mode.
Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Okay, that means don't be aggressive, just manage positions.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and on all of your favorite streaming services.
You don't have to be doing something every single day. I'm talking to the newer traders, newer people.
The US yields are trimming again as well.
Yields are moving lower. Let's take a look at the yields. All of this needs to move lower, except for the SP, of course. We need to see the 10-year continue this fade. Okay, that trader that was looking for a 15 basis point move got a 10 basis point move in the yields. Russell mentioned that late yesterday, I believe it was. Yeah, NYSE's starting to turn. I see that too. NASI, NIMO. Okay, yeah, I agree. Yeah, seeing the same. Still risk off. We got the NASI and the NYSE summation index turning lower, peaking, while the NIMO and the NAMO have moved lower as well. So risk off, risk off. That means don't take anything new at the moment. Netflix is up 92%, so I might go ahead and take this trade off. Nah, I'll leave it alone. It looks like it's going to continue higher. So Netflix, I have a put credit spread on, looking for prices to move higher. I collect the credit when I initiated the trade. I hold on to the trade as time goes by. Theta kicks in. Theta is $16 a day. Okay. That looking really good here. That's looking really good.
That to me is really good for bulls here that are trying to take this job report in stride. There still is a 52% chance being priced in the Fed funds futures right now on that March cut. So it's down from yesterday's at 62%, but still more than a coin flip in the market's favor for a cut. So despite the good number from the economy this morning on jobs and the warmer than expected wage gains, we're not getting a massive repricing here of the macro backdrop. So, significant repricing, but not a massive one. And with the dollar a little change right now, there's definitely some potential risk off from anyone who joins us. Let's look at some of the earnings and the other news, Bo. Can't forget
All right, that is, let's see, what do I have? Netflix is the Today's puts.
And we learned that Modelo is still king. It's been amazing. They took over the reins from what we saw from Anheuser-Busch.
Today, 05. All right, Netflix is plus 90%. All right, so these puts will expire worthless. $16 a day in Theta. Okay.
Estimates in the S&P 500 found its way in the green now, so it's now up 0.1%.
Is he too loud when he's talking? I can't really tell. I'm not monitoring the stream. Plus 92% on Netflix. All right, that's looking really good. This is the first one I've held to expiration this year. Original credit was $225 per contract for Netflix. Okay. Netflix, let me show you what Netflix looks like now. Okay, these puts expire today, so you'll see coming into the week of expiration, Netflix, which I have, those puts that I sold are now worthless and will expire out of the money. So collect $225 per contract. I had 5 of those, and just watching Netflix. If for some reason it started to sell really hard, I could always take it off. I still probably be able to buy it back for maybe 10 cents on the puts or something like that. But you can see we're taking off to the upside, so that's a very effective trade. When you think a stock is going to rise, I like using stocks that are big caps like Netflix, has a lot of liquidity. If you look at the open interest is pretty high. Okay. And the strikes that are closer to the money, there's a lot of yeah, there's still a lot of open interest. 2,000 contracts at 470. Another $8 below that. So I don't see that happening. Anyway, also got Apple on. Let me go ahead and take a look at Apple. I got this Apple trade. I'm looking for Apple to drift a bit lower. Let's take a look at Apple. Okay, Apple is at 182. I sold the 195 strike. Do you think it's going to get to 195? Do you think it's going to get to 195? Not today. Not next week. Maybe by the end of the week, if the markets start to bounce, S&P starts to bounce, and the Qs start to bounce, I might have to manage these more aggressively. Okay, so that said, those are existing positions. Let's see what's working at the moment. Good morning, everyone. Good morning. We are 9 minutes into the trading day. Okay, this looks completely different than yesterday. Remember, consumer staples were very popular. Healthcare was very popular. Now we're seeing a little bit of profit taking in there. Okay, Lily's up flat. All right, so all of the financials, technology, communications, and cyclicals look pretty good. Tesla's off 0.5%, having to recall all of its vehicles sold over the last 10 years in China. Okay, so let's look at the New York FANG index. Still early. I don't do much of anything, especially on a risk off day. We're a risk off until the S&P gets back above 4,700. Okay. Futures currently at 47.33. The 60-minute time frame shows a TTM histogram turning the corner. Lots of volume. Turning the corner on a TTM histogram is the meaning there is it goes from red to yellow histogram. We've got the RAF Pro, Ready Aim Fire Pro. That's a John Carter script. It's on a buy signal on the 60-minute futures. Tick cumulative. We're 1-to-1 up down volume. Nothing to really do at the moment. Risk off. Nothing says go buy and get long just yet. Okay, so let's just wait for the markets. We don't need to get too aggressive. We definitely don't want to get aggressive. Here's the S&P. Okay, that's not correct. All right, here's stock charts again. Really starting to piss me off. Stock charts. 11 minutes into the trading day. Is this not correct yet? No, still not correct. I just refreshed this. What the hell is going on with stock charts? Okay, now we're okay. Now we're all right. All right, so a little refresh there. All right, so we're sitting inside of yesterday's price action. They took out some stops below the 21-day, below 4,700. So if they reverse this, we could get a massive move to the upside. If you're open to taking risk, there is that risk that we could see some shorts covering. I wouldn't do anything just yet because yesterday's close at 46.88 on the S&P cash triggered the risk off condition, which may now lead to accelerated selling and a spike in implied volatility. That's not happening just yet. We are below 4,700. However, it's a big however in caps. We don't see the selling. We don't see some accelerated selling, and we definitely don't see VIX spiking yet. The dollar, let's go back to that again. So we'll be doing this for the next half an hour or so, 45 minutes. If you want to take some risk and you think that this is going to bounce, keep an eye on the S&P. The dollar is starting to bounce. Let's see the 10-year, US 10-year. Okay, that's holding at 4%, 4.05%. Junk bonds still at 93. That needs to get up into, 94, 95. All right, we're starting to see some accelerated move to the upside now. SPY's starting to go. Let's keep an eye on SPY. Okay, let's go see what SPY's doing. All right, so we're on a buy signal. Looks like short. Just assume this is shorts covering for now. This turns into more. We're going to break this downtrend. Let's go review the video tape. Okay, so when you look at the 60-minute, which I'm going to show you, not only are we below the 4,700 level, we're below the 20 EMA. That dotted line's the 20 EMA on the daily. The green line is this time frame, the 60-minute. So long as we're below it, we are risk off. We need to get above it. Now, that's going to mean over the next hour and a half, we need to see a lot of buying. I don't see the buying yet, but VIX is moving lower. So that's good. Now, this is something that Buford shared with me this morning. Let's just go take a look. Okay, advanced decline percent is below 0. All right, so the move lower isn't necessarily bearish. It's neutral to bullish if this starts to turn. If we start to see buying, these will start to turn back up. So it's not like we're headed down towards 30%. Now, small caps are headed down towards that level. But the thing I wanted to show you was NAMO, and specifically NASI, the summation index of buying versus selling, is turned. It's peaked like it did over here in July, late July. What happened? The NIMO rolled over, which is what it's doing right now. You're on 3 red elder sticks. Clear as a bell to me, risk off. So if I was thinking of a strategy, I'd be doing something like we are doing on Apple, which is to sell calls, figuring that Apple's not going to get back to 195. You can look at just about any, big cap stock and do the same thing. Sell a call, buy a call overhead, looking for prices to stay below those strikes, maybe consolidate in this area, but not in a bullish trend just yet because we have risk off, okay? So that's in the back of my mind. I'm also thinking I am not going to do anything until I see some really intense buying. I don't care if I miss the absolute low here. What I'm looking for is a reason to go from risk off to neutral. We haven't even gotten to neutral yet. Okay, so SPY's starting to spike some more. So looks like shorts are covering pretty aggressively now. Shorts are starting to cover. You got 260 plus trading days in the year. We've had 4 this week already with lackluster signals. I don't care if I miss a week. I'm just selling premium in the meantime. Okay, let me check a few things while I'm yapping away here. IWM, I have a credit spread on IWM. I have calls that I've sold. I sold the 205 and I bought the 210. Okay, let me show you IWM. That's up 38%. Okay, let's go take a look at IWM. All right, IWM gap down. We're above VWAP. Okay. All right, here's the IWM trade that I have. IWM. I'm just looking for IWM to fade a bit more. Okay, so IWM, if you zoom into that window, you can see that I've sold those calls overhead, the 205s, and I bought the 210s for a credit. This is a few days into it now. And I'm just looking for IWM to, consolidate in this area. I'm not looking for it to sell off. I'm just looking for it to consolidate at present. IWM. Okay, let's go take a look. IWM. Okay, so IWM currently looks like this. So I sold the 205. I sold the 205 call. The reasoning there is I didn't think we would get back above the 21-day, above the 90 MA. I didn't think we would revisit the highs just yet because we're consolidating the gains from October. All right, so I'm not looking for the markets to drop off. I'm just looking for it to continue to fade a little bit, maybe consolidate in this area, best case. I'm not uber bullish. I'm more neutral to slightly bearish. More neutral, really, because I'm not looking for a retest of the 50-day, which a lot of people are looking at. So now I'm just sitting here waiting for IWM to consolidate in this area with this trade setup. Now you could do the same thing after a little bounce, maybe. If we don't correct this trend immediately and we get rejected at a higher strike, maybe this goes up to 200 and turns back down, or 197 or 195 turns back down. You could do the same trade just at a lower strike price. Additionally, I'm thinking about if IWM continues to move lower, I'll have the call side of what could be an iron condor. I could sell puts down there at say 182.50, buy the 180, something like that, to have a condor. So I'd have calls overhead sold and puts below sold. Looking for price to stay between this area with a $3 plus ATR.
With a range of 54 to 50.7. Services employment forecast 51 on the prior 50.7. Services new orders forecast 56.1 on the prior 55.5. Services prices paid forecast 57.3 on the prior 58.3. And US factory orders month on month forecast 2.4% on the prior minus 3.6%. With a range of 5.4% to 0.8%. Durable goods revised, forecast 5.4% on the prior 5.4%. Core durable goods revised, forecast 0.5% on the prior 0.5%. And Canadian IBPM, prior 54.7.
So my checkup was good. I'm good to go for another year.
Protect your trades from macro headline risk with financial.
I'm good to go for another year. So you guys have to put up with me for another year. I did my doctor's appointment. He did do a little biopsy on a piece of skin, if you will, on my temple, near my temple, that I thought was cancerous. He said, no, it's not. He said something else. You know, doctors talk funny language. So I'm good. You know, I spent all those years in Hawaii out in the sun every single day for like 3 years straight. That was back before anybody started paying attention to sunscreen. And I'm, you know, Irish, French, and some Italian, but mostly on the Irish side, Scottish side. I have Scottish, Irish, French, and Italian. That's quite a mix. Irish and Scottish from my mother's side, Italian and French from my father's side. Grandfather on my father's side was LeBlanc. Grandmother's side was Maniscalco, like the comedian, but not related. At least not that I'm aware of. And on the Irish side, last name Tracy, and also John Stone from Scotland, Lord John Stone from Scotland. Anyway, what is he talking about? I'm just talking about nonsense right now, just waiting for the markets to settle down. I'm never in a hurry to do anything. I know what my benchmarks are before I come into the trading day. I know what my strategy is. I always have it written down. Although this week, I say that, although this week I haven't technically written it down. I'll write it down to end the week in my diary or journal. But I know that 4,700 is a critical area. We held it for a few days. We lost it 2 days in a row. Wednesday, we bounced back above it, opened and moved higher into Thursday, dropped below it yesterday, as you know, closed below it. And now we're trying to get back above it. So it's resistance overhead that we have to deal with. But with a risk off situation, I'm not in a big hurry. Did I buy this low? No. Could I have? Yes. But I have a number of positions I just want to manage. That Netflix credit spread, Apple credit spread, IWM credit spread. I have one on NVIDIA, have one on Microsoft. So I have plenty to do. With NASI and NYSE, let me just go back to that. I just want to show you something else. All right, so not only we're below 4,700, yes, we're bouncing. Do I want to get long again aggressively? Absolutely not. Absolutely not. So we do look good, though. We do look good. This is the market carpet for now. Okay, this is the market carpet for now. Okay, so you can see a lot more green. So, you know, you can do some scalps, short-term swings.
Services employment forecast 51 on the prior 50.7. Services new orders forecast 56.1 on the prior 55.5. Services prices paid forecast 57.3 on the prior 58.3. US factory orders month on month forecast 2.4% on the prior minus 3.6%, with a range of 5.4% to 0.8%. Durable goods revised forecast 5.4% on the prior 5.4%, and US core durable goods revised forecast 0.5% on the prior 0.5%, and Canadian IV PMI prior 54.7.
Okay, folks. So pick your sector. Looks like technology is going to do good today. Maybe a further bounce into next week. After 2 to 3% or more pullback, you know, you start to look for signs that institutions are buying. That will show up in up volume. You know, relative volume will show up 2 to 3 times or greater than normal. One thing that AMD 2100 calls buying a 280 strong name early ahead of CES next week. All right, so let's take a look at IBM. AMD. Thank you, Buford. Looks good. AMD looks good to go.
You pay roughly even for this, no money, right? That means you can see here from the risk profile that between 50 and 55, I've got zero risk, right? But you've got to have the capital to buy the shares if the stock does fall back below 50, but you're buying it at about a 4% discount to the current share price.
All right, AMD looks pretty good. Buford mentioning that there was 2,100. Actually, it's Jason at Three Peaks, but Buford shared AMD with 2,100 of the January 12th, 138 calls, buying at $2.80. Strong name early ahead of the CES next week. Lots of tech focus. One of the reasons why we might see some further bid in the tech stocks, despite the loss of the 4,700 level on S&P. Lots of tech focus coming into next week with that conference, and a perfect pullback this week ahead of it for an interesting setup for a rebound in the Q name. So I like that AMD. I might put, let's see, do I have a position yet? No, I sold it. All right, I sold it for a profit. AMD, I might sell a credit spread here. We've already pulled back 2 or 3 days. That's what I'm going to do. I'm going to sell a vertical here. All right, so the 12th is when they're buying calls. Okay, so let me go to the 12th. The 134 put is probably going to be too close to the money. 134. I don't mind owning. I don't mind owning AMD.
1 minute remaining. I'll lead with US.
35% IV.
You're paying roughly about $102 on this covered call strategy, 900 shares selling a call against it. Takes your break even at 102, so you're buying the shares at a discount because you're selling that upside call. But I think the key with this type of strategy is, yeah, you can take advantage of upside above that break even 102.
Okay, I just took a credit spread. It's a little early. We could still see some downside.
Creating more credits, increasing that potential profitability, lowering that break-even point. So this is in essence a paid-to-wait type strategy where, hey, I want to collect that 3.7% dividend yield, but I'm also willing to sell some
10 seconds.
calls up above the current share price to take advantage of more.
Yep. All right. Okay. So a unique approach makes sense. Something like that, John.
50 spot 6, 50 spot 6, lower than forecast, 52 spot 5. Factory orders month on month, 2 spot 6%.
Here we go. Whoa, look at the markets go.
2 spot 4%. Seeing some downside and dollar upside in stocks. Canadian IV PMI 56 spot 3, 56 spot 3. ISM services prices paid 57 spot 4, 57 spot 4.
High tech alert.
57 spot 3. Services new orders 52 spot 8, 52 spot 8.
Good timing on that, the AMD. AMD.
43 spot 3, lower than forecast 51. Core durable goods revised 0.4%, 0.4% lower than forecast at 0.5%. And durable goods revised 5.4%, 5.4% as expected. Seeing continued downside in dollar, bit more upside in stocks.
Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
All right, nice big pop there. All right, so Corey suggested that I start a new channel on credit spreads, so I'm going to do that. Brother Bill, you're welcome to post in there too.
Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up to the minute market insight.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere,
on any device for free.
Oh, look at the markets go. Bears are getting crushed right here.
High tech alert plus 800.
White House budget director is not optimistic on a shutdown deal.
Portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back, Morning Trade Live. We got a fun session underway here. We're in hour 2. 30 minutes of trading has changed things around quite a bit here.
Treasury 2 to 10-year yield flips lower on the day after ISM services.
Okay, a lot of green. Let's just get straight into it. I got Ben Lichtenstein here with me in studio with an update on the economic numbers coming out today. And it looks like the employment situation has, to some degree, been overridden by a bad ISM services print. We got more coming up in the next hour. We're talking charts. We're talking supply chains. We're going to trade Boeing. But right now, let's talk about data for this total.
All right, AMD looks good.
Look at the dollar now, down 30%. ISM services, 50.6. Estimate was for 52.7. This has been the bread and butter of the economy. Is this still expansion here? You put a 2-point miss. Is that why the whole market was flipped around?
Well, the market started to reverse a bit before this. I mean, we've seen
Agreed.
stocks coming back after that initial sell-off. The S&P dipped down to 4702, and then
Sure. But look at bonds just now. I mean, come on.
I'm watching this for sure. We're seeing a big move here, so we're just furthering the advances that we saw after the initial reaction, which seemed to be a bit of a head fake.
Yes.
In reaction to the jobs report here. You can see this is accelerating things to the upside, though. You mentioned a 50.6 for the ISM non-manufacturing PMI. That was well below the 52.7 prior, and it looks like they were looking for 52.6. So to Oliver's point, 2 points below expectations here. But as I look at the numbers here across the board, they were all a miss. What stands out to me is the ISM non-manufacturing employment.
Okay, kind of a nice spike here. Well, we're back above 4,700, so we just flipped the script. Wow. Back above 4,700. Is it over? I wouldn't bank on this being over yet. I don't think the bears are done. But I'm certainly looking at this a little bit differently now that we're back above 4,700.
Yeah, Oliver, the numbers look pretty soft here. It looks like factory orders came in at 0.1%.
All right, factory orders, okay, fine, whatever. I mean, look, this is kind of one of those. I like to use, the Rorschach test. It's like, all right, you're above 50, you're expansionary, but this has been well above 50 for a good period of time now. So to see it kind of hovering above expansion, the mighty American services economy, I do get the narrative there that might suggest we really started to kind of drive a wedge into some of the strength of the economy. But then we just got the big job numbers. So I mean, this is going to be a tough one. Because if that move this morning in bonds to the downside was a fade, which to your point it was, we started rallying bonds back. Then this massive bond rally kind of looks like it might be.
Hi, Tip Alert plus 800.
Still above 50 for services. I mean, your new orders, 52.8. I know that's a big drop. And the employment one, which is the huge drop, is in competition with what we saw for NFP. So, I mean,
well, maybe the idea being there, the increase that we saw in terms of the services, the employment component there, and, not necessarily where those higher paying jobs come into play ultimately. And I think the idea also being, if we were to start to see a downturn in the economy, maybe those would be the first that would start to get kind of cut. So, right. So the idea being there, yeah, maybe this does just kind of feed into the continued chop or range bound type activity. We've been talking for a while about the possibility for yields kind of settle into a range here.
The S&P 500 up 0.6%, the Nasdaq up 0.6%, and the Dow up 0.4%.
Again, I think the idea being here that the service sector continues to remain very strong for the most part. While this number definitely going to put some question in that, but I think it's still the outlying area where we're seeing strength.
Dollar move is like
back to 102, yeah.
Yeah, the dollar move is basically saying like we're done for the day. Don't worry, everything's going to be fine. Fed's going to be cut according to plan. So what a crazy head fake.
Well, speaking of, I mean, look at the S&Ps there. It really speaks to strength, the weakness in the dollar, strength in the stocks. 50 points off the lows from earlier this morning. And
Extreme high tip alert.
Exactly what we've seen for a while now. That really well-defined inverse correlation. Weaker dollar has fed into bid activity in stocks.
I wonder if crude will continue to strengthen. Gold definitely has. We're going to turn on gold on
2065.
But crude is kind of a different relationship.
AMD's a new spread. Dash, is it Iron Condor?
That puts gold kind of within, the range again of its recent new record, up towards 21 almost. So
A790, 90, A790.
Untangling, there was a lion and a tiger, and their teeth were locked. Their hands NFP and then the ISM. You know, how do we disentangle these things? Because they seem to be very much in opposition, but the market is going
Extreme high tick alert.
ISM all the way. Breakdown in employment there, more important than the actual employment number. I mean, that's pretty amazing because usually we rank the AFP as like the #1 print of the month, and ISM just totally blew it out of the water in terms of market reaction.
Well, I mean, Oliver, we've seen a lot of strength in labor conditions recently, and I think the market was maybe not as surprised as one could have expected.
There's more surprise to see services break down.
And the fact that the wages component didn't necessarily see that huge uptick that would have derailed some of the momentum in stocks. And lastly, we know that this is not necessarily the Fed's most closely watched indicator in terms of making that decision-making process. I mean, look to the numbers next week. More importantly, I think CPI, PPI, and in a data-dependent Fed environment like we are, and this just keeps coming, right? I mean, it seems like one number after another here that we, as we digest the current circumstance here, we're always looking forward to the next, and that's continued to be the case well into March.
That was kind of my point, Kevin, this morning, which is I would have thought that the stock market would have had better shock absorbers built in to handle a slight uptick in wages. So the comeback and retracement of the initial response didn't make sense to me. Yeah. I mean, I guess, look, there's an argument to be made that if you're looking for signs of finally meaningful breaks happening in the economy the way the Fed wants, the ISM, the services components, which have been unreliable now for 3 years, breaking down this way, but it's not a misprint. So I think haven't seen much of this. Thank you very much. Appreciate it. Let's keep talking.
216.
Totally different across the board, strength and everything. Boeing 2 is already on our list to talk about. Kevin Green joins us with the latest analyst commentary on stock. 1.5% this morning. Kind of a tough past week for Boeing, though. They had to tell the FAA to check some of the new 737 for a loose bull.
White House economic advisor Brian says the jobs report shows a very healthy economic picture.
Issues when it comes to Boeing, but we have seen some buyers starting to step in because of the low valuations, especially towards the end of last year. And we have Wells Fargo actually reaffirming their overweight rating on the shares and increased their price.
Do you want to stay up to date with the latest on the leading edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Use Pro for a year's worth of our service for the price of $1.
That's going to unlock a fair amount of value. They do believe that China deliveries can unlock around $5 million to $1 billion of cash just for the 737 line, and around another $500 million in cash for the 787 line. And so right now, once again, we kind of see a little bit of bullishness when it comes to the industrials. Boeing has seen a significant amount of new orders last year, especially from overseas. So they've been able to, grow their order book. Now, the biggest question, Oliver, is their ability to deliver and their ability to have great quality control. You know that some of their suppliers,
White House economic advisor Brainard adds that wages grew over 2023 as core inflation came down.
When it comes to Boeing, because of some of the technical issues that we've seen with some of these planes that are already in service.
So I was kind of dramatic about that report that they needed to go check a bolt. We had an expert who was on the show.
All right.
But we're still at $250 almost. The market, has obviously had this massive move. What do you think is kind of the catalyst for them going forward? Is it the sheer volume of planes getting shipped? Is there a possibility that things will be trading back at its old levels before their incident?
Yeah, potentially. I think the biggest thing that's a tailwind for Boeing is that the new planes that they are putting into commission, they are a little bit more reliable and as well as fuel efficiency, which is why we have seen a fair amount of orders. So a lot of these airline companies have old planes. They want to be able to obviously improve the fuel efficiency to be able to improve their bottom line. And some are even estimating that they could save around 30% when it comes to fuel costs just by the new planes that Boeing can provide over the long term, right? And so that's where we are actually seeing a lot of this demand coming from, not only here domestically, but around the world. I think that's going to be a tailwind for them. But as you talked about, the technical issues, even though they may seem minor from an engineering standpoint, as also about your reputation, if you will, right? Because if you have just one plane that goes down, or two planes that go down, or have issues, that can actually stop flights for your whole fleet. You saw that with the 737 Max. You don't want to have that type of scenario again. And so I think it's still a
So Fed swaps reprice odds to 70% chance of a 25 basis point March Fed cut. So again, those chances have now come back to where they were before. The Fed swaps repricing odds to 70% for a 25 basis point March Fed cut.
Measures in place. Yeah. So the idea here is that as long as you don't have any big mess ups, it should be a pretty smooth flying, because there's only like one competitor. So that's where it's like, all right, we're really counting on you, Boeing, to get this right. Why I feel like any hiccup or any reports on any loosened seatbelt, should be a bit of a yellow flag. But they've also got a pretty good kind of buffer with the market ultimately, because there's just no one really breathing down their neck. It's still basically a duopoly. So they're going to have to mess up big time, it seems like, to in the recovery mode and recovery kind of projection that they're on.
Yeah, I agree, and you can actually see that even with some of their suppliers like GE, they continue to see a lot of profitability when it comes to the aerospace business. And so this is going to be, once again, a tail where there's only a couple of companies, only actually really one, that can be a little bit of a competitor. But when you're trying to shift, if they do have an issue, Oliver, even trying to shift suppliers, when you're looking at maybe an airline company that now wants to buy something that's different from Boeing,
All right, we're starting to pull back a little bit. So just because we popped on that number doesn't mean they can't continue to sell. Remember, I'm looking for a lot of these FANG stocks to continue to fade or consolidate in this area. If we follow through, hey, that's great. I'm looking for a follow through. Love to see that. All right.
Their ability to deliver 737 or 747 and 787 series of airplanes.
All right, top pick, looking for a new multi-year high from Wells Fargo, $280. Take above that 278, 2021. All right, thanks, Kevin Green. Appreciate the discussion on the analyst note.
All right, pulling back pretty aggressively now. They're selling into strength. All right, I'm probably going to take this call. I could push a little bit higher for NVIDIA, hopefully.
I do think that the fits and starts that Boeing's had to contend with over the last several years are slowly getting to the point where, as you guys pointed out, that the tailwinds are in place to hopefully keep the flight pattern fairly smooth moving forward.
Looking for a follow through and a push higher.
Continue to maintain this upward trajectory. It's not going to be without a few bumps, but over
Yeah, sorry about that. Sorry, was arguing with the wife.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
All the need-to-know info from every trading day. I'm Renita Young. Earnings.
That's a pretty good way of putting it there, Scott.
All condensed into a few minutes. Download the Schwab Network app and join in on the latest market trends. Available anytime, anywhere, on any device for free. Recap your trading day with the wrap right here on schwabnetwork.com.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device, and available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
All right, S&P looking good, looking good. Mm-hmm.
Well, the situation hasn't changed much, if anything, because probably escalated. We still have issues with traffic in the Red Sea. Obviously, the attacks remain in place. Maybe they have eased a little bit in terms of frequency, but I think still the risk is there.
Okay. Mm-hmm.
This is obviously adding pressure to ship rates because it's a longer distance. It requires more fuel, so you need to pay more. And I think this is going to be for us for a while. We'll have a solution in I think the broader geopolitical situation in the Middle East.
Okay, so there's a meaningful change of routes that's happening as you see it?
Yeah, basically the large container ships, these are the ships that move mainly consumer goods from China to Europe, are not really transiting through the Red Sea and through the Suez Canal to the Mediterranean. So they prefer to take the longer route around Africa. That's time and that's fuel as well. It's more expensive, and that is causing basically shipping rates to spike. They have basically doubled in the last month or so. So it is significant. Obviously, we're not in the levels that we saw during COVID, but still, a doubling rate in a matter of weeks is significant for this sector.
And what type of goods are these ships carrying? Is it just everything under the sun, or is there anything in particular that's at risk?
So I think the most impact has been on consumer goods like furniture, clothes, electronics, things that we buy every day from the stores. This is not a commoditized shipping like oil or dry bulk like coal and iron ore. There has been an impact there, but it's not as meaningful. The major impact has been on the containers. These are where the emergency rates in the Red Sea, and that's most of it.
Let me go check my son's account. All right. Mm-hmm.
Yes, I mean, obviously, as I said, the container ship companies have seen the most possible impact, and the stocks are the ones.
All right, looking good. All right, so that's good. Amazon. Did I post Amazon in there? No, I don't think I did. I don't think I posted Amazon.
Routes being changed and more longer distances, that affects the whole shipping space to a different degree.
Amazon.
I think like as we look at shipping,
Put that on yesterday. Amazon.
if this thing continues, you should continue
Amazon.
higher shipping rates. And that, obviously, that's positive for the shipping companies. Now, again, we all read the news and we all see the headlines. If anything changes in the Middle East, if you have basically some type of solution that again transit the Red Sea, echoes terminal again, obviously the whole situation could change. But again, who knows what happens in the Middle East? And as we stand today, this definitely is positive for the broader shipping space.
Be wet today up 3.5%. Be dry down a little bit. Freight waves tanker shipping, yes, BWEC, and then BDRY dry bulk shipping. Pretty big spread, but
So Big West is basically focused on the oil tankers, and oil tankers have been doing a little bit better in the last few days. Big Dry had a huge couple of months. I mean, the stock has doubled. I mean, the ETF has doubled since probably November or so. So you've seen basically the reaction in shipping rates on the dry bulk space. We're hitting at we're at unseasonably high levels here. Usually the first quarter of the year is the weakest, and still rates are very, very strong in the dry bulk space. Tankers have lagged a little bit, but now we've seen a reaction here. They start to turn around and move higher. And again, it's part of the broader.
All right. So Amazon, I took this yesterday.
Delays and longer routes, and owners are not willing to take their ships and put them at risk in the Red Sea. So they're willing to take a longer route, have delays, and that's causing basically shipping rates to spike. And that's reflected both on Big West and Big Dry.
got it. Be dry has more than doubled in the last 3 months. As you mentioned, be wet is a little more stagnant, kind of catching up here this morning, though. Does the big run up in dry have inflationary implications at all? Is going to continue closing macro facts? There's a lot of celebration about how the supply chain's all good and inflation's all done.
Well, I think if you want to look at this, you should look at the containers. And I think that's where you might see some increasing in pricing on the final delivered goods. Because again, the consumer pricing is not so much focused on iron ore or coal, which is more China focused. But when you look at delivered
US
goods,
Treasury Secretary Yellen
months,
says
you would pay
pessimism
more
about the economy has
for,
proven
clothes,
unwarranted.
for furniture, for electronics, because the shipping companies will pass through this cost to the consumer eventually.
Protect your trade
at
from
the same
macro
degree that
headline
we
risk
saw
with
during
Financial
COVID.
Spread.
Again,
Now only
rates have doubled,
$99 a
but they
year
doubled
for
from
our
a very,
real-time
very low
service.
level. But if this thing continues and rates continue to rise over the next few months, yes, eventually towards summer, you will see this spike being passed to the consumer.
Amazon. I just posted yesterday's trade on Amazon. My son has it. I have it. Just mine is larger than his. I have 5. He has 1.
Take a look at 2 big competitors in the athleisure market, Lulu and the On. Then we're going to look at Costco as well. Does anyone compete with them? Still sitting on the record.
Okay, talking about Amazon. Let's see.
Number 1 broker here for the number 1 hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know, Carl is the only front man you need.
Oh, I gotta take this, Carl. Schwab.
Have a choice in how you invest with Schwab.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available
Treasury Secretary
anytime,
Yellen says
anywhere,
some surveys
on
beginning to show
any
Americans are
device.
more optimistic.
Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Renner.
Okay, I just posted in the new channel, premium selling channel. Just make sure you check that out. This is the Amazon trade I took yesterday. This is doing just fine. Amazon just needs to stay between those 2 sold or short strikes, a short call and a short put. Just need to stay in between there. Amazon's currently 146.39, so it's starting to bounce. So you can see some days it's going to move up a couple of bucks, some days it's going to move down a couple of bucks. But what I'm looking for over the next couple of weeks is that price just stays in between. If it does, then I keep the entire credit plus the theta expiration every single day. Okay. So this one currently has a theta of about $15 a day. All right. So as time passes, not only am I going to keep my credit, but I'm collecting $15 a day in theta. Okay.
Ready to go at 12 p.m. Eastern on the Schwab Network.
Tesla. Okay, watching Tesla for a bounce. Let's take a look. I just got a response from Sunrise Trader, if you know who he is. He mentioned Airbnb yesterday. Oh, look at that. Nice move, too. Nice move. Nice move there, Sunrise. Cool. Check out Airbnb. I might take a credit spread on this one. Okay, let me look at Airbnb because this is moving away, much like AMD. Let me put a. I'm going to put a put vertical on this one. Let's go out 2 weeks. Let's go out to January 19th. I'm going to sell a 20 delta or lower. Sell a 20 delta or lower. That would be, let's see, a 130. Let's see what that is. All right, I'm about to take a trade on Airbnb. 130 delta. No, that's a 23 delta. 130 is a 23 delta. I want to go to at least 20 or lower. 20 delta would be selling the 129. It's pretty close, but we got the 50-day below. Okay, I'm going to go. Let's start with 3 strikes wide. Okay, I'm going to go 5 strikes wide. No, I can't. All right, 4 strikes. That's not enough. Let me go out one more week. Let me go out another week. Let me go out to January 26th. Okay, I can collect $78 in premium versus $322 in margin. It's okay. Could be better. Let's go out to the next strike, which would be first week of February. Okay, that's 90 versus 310. So this is a bit better. All right, I'm going to start with this. Oops. And a credit. And see if I get filled here. Okay. I'm looking to take the 129, sell the 129 put. So I'm going to have to manage this a little bit more aggressively if this does lose it. This looks really good, though. Sell the 129. You could do a cash secured put too. Sell the 129 put and collect $225 per contract. You just need to have the cash in the bank. If you were to get assigned 100 shares, it'd cost you $12,900 if you got assigned. Or you could just go calls, or call vertical is what I would prefer to do. Buy the, say, 135, sell the 140, something like that. Give yourself a couple of weeks for it to work, maybe 3 to 4 weeks. Looks like Airbnb looking really good.
resistance here. Standard deviation channels can help us with that situation. We take our blue line, our linear regression line, our line of best fit based on closing prices, then we take standard deviations above and below to create these channels, and that can help us gauge some potential resistance here. If we were to break above our best closing high, which was near just above 666, 695 would be where the plus two channel comes against that orange line there. So that would be one area to look for some potential resistance here. And you can see as well that we also broke through the trend line. You see that white dashed line there. We kind of drifted sideways.
All right, looking pretty good. Oh, beautiful. Watch Tesla. Looking for Tesla. All right, there goes Meta. All right, everything is starting to work now. Okay, I might take Apple off if Apple starts to rally too much. So far, it looks okay. Apple, what do I have? Apple expiration is the 16th of February. I don't see Apple getting to 195 today or Monday, Tuesday next week. So I can afford to not be that concerned. This is the great thing about credit spreads. I know I've said it before, but credit spreads are a good way to earn income consistently with less risk than you think. Okay. Let's say you want to go long Airbnb. Now, there's like several ways you could do this. You could, let me, you could take a call. You could buy shares. You could do a call vertical, in which case I would probably buy the February first week of February, February the 2nd. I'd probably buy the 135 call and sell the 140 short. So what that would give me is a net debit. And if the maximum I could make on the trade would be if price got to 140 before expiration. You could sell it a little bit higher. You get less of a credit, so your debit would be higher. So that's one way to do it. You could do just straight calls, in which case the problem with straight calls is that it has to happen quickly. It has to do what you think it's going to do, probably that day, if not sooner, meaning in a week, the next couple of trading days. It needs to happen. Or you could buy shares and sell a covered call. Okay. Now, on the put side, you could do what's called a cash secured put. You'd need to have the money set aside, $12,900 if you sold the cash secured 129 put, collecting $250 in credit. I don't think it's worth it, really. I would rather take a put credit spread where I don't have to put that much money up. I guess just have to put up like $300 versus a credit of $100. So 30% return on my money, 30% return. Okay. So Schwab will keep 300. I get a credit for 100 plus or minus a couple of dollars. And depending on how many contracts I could take 5. So I'll get a $500 credit. I need to put aside $1,500, much less than having to put aside $13,000 for a cash secured put that you're only going to make $250 on. So you follow? So I'm going to sell the 129 put, I guess, and buy about 2 or 3 strikes lower. Let's see if did I get filled? No, I didn't get filled yet. All right. So it's starting to move a bit higher. Let me change my credit to, okay, it's right in the middle. So I might get filled here. The problem with selling a credit spread as prices starting to move away too quickly, you won't get as good a premium. Okay, so if this dips a little bit, I'm going to leave my credit. I'm going to split the bid and the ask. I'm not going to chase it. We'll probably get a little dip sometime around 12 o'clock, 1 o'clock, in which case I will probably get filled. I'm not going to chase it, though, because it is a Friday, and we want to see this price action continue above 4,700. Airbnb.
And you can see as well that our yellow 21-day exponential moving average is starting to flatten out a little bit there. As we've seen price kind of drifting sideways, the trend of our moving average is slowing down there. So that's something to keep an eye on. If that starts to roll
129, 125.
that's a sign of trend change. That's one of the things we look for as technicians. We want to try to get in as early as we can when the trend has changed. You don't want to jump the gun. You don't want to do it before the trend changes. That's the tricky part there is identifying when things are actually starting to roll over. That's one sign you can look for. Nevertheless, plus one channel comes in right around 508 or so, 507. That would be a resistance point to clear. If we do keep pressing into those all-time or new highs above 516, 557 is where our plus two channel comes in. That orange line.
Okay, Airbnb, I'm trying to get filled here.
That's where you might potentially look for some resistance. To the downside, old lows near 483, 484, our green dashed line there. Then we've got that white line. That's our trend line. So a lot of things to consider between like 480 to 490 or so. That would be a supportive area. And once again, as well, just like Costco, we have very clear volume nodes according to our volume profile study. Check out like 460, around 412 or so. You can see there's very large spikes. Those are key areas to watch for support as well. So a lot of support levels given the kind of steady pace at which it rose.
Okay, I got filled at 90. I got filled at 90 cents or $90 per contract.
Rate of change for the past year. Last one on can't say enough about how comfy shoes are, but there's no way that not that there's no way, but if what you see in a retail store has any bearing on a stock whatsoever, then On is going to have some inventory issues to reckon with because they are everywhere. I started buying these every time I saw them at Nordstrom Rack because they're literally $90 cheaper than across the street at the actual Nordstrom. But now it's like, if you did that, you'd own 50 On because they're packed. They're everywhere. They've got so many discount stores right now. It's nuts. I don't know how this is happening.
All right, so looks really good on Airbnb.
I've heard nothing but phenomenal things, and they're actually, I think, one of the most aesthetically pleasing looking shoes because some running shoes, frankly, are not so attractive. So I will give them that. But this name also looks pretty strong on a 12-month basis, although I think that they trade more in nature with a growth stock because they're only about 2 years into their public market, whereas like a Lululemon and Costco are just more established companies. This company was public back in September of 2021. I guess now well over 2 years. I'm still in 2023, but I need to say I'm honest with conviction with the top pick for 2024, replacing absolutely my Chewy. They also maintained their buy rating $40 price target. That's about $4 above the analyst average. But they said shares have not participated in the recent rally as the rest of the market has climbed. This name has fallen about 30% from August. And the stock has not reflected the company's unique growth profit, while short interest is also up around 25% in the last 6 months. So that's pretty substantial. But also, I would say that adds an element of volatility. So it's like a trader's dream, I guess. But then, as far as like investing in this thing goes, it's volatile.
All right. Don, yeah, sideways, couple earnings that have gone a little negative. I'm really curious about what the next one's going to show. I'm not sure how they can sustain having so much in discount stores while also asking for premium and recipe channels. That oftentimes is like the recipe for disaster for retail companies. So, Rick, what do we make of this one? Look a lot different than the other two. It certainly does. And this one is quite interesting for a very different reason as well. We see this triangular type price pattern taking place here between our two white lines converging toward each other. We also see our moving averages clustering together and moving sideways. These two things together speak of a lack of trend direction here. This is a point where I would be excited as a trader looking for some breakout areas. Could lead to a break beyond our green line or our red line there. You can see our red line here, 32. That was where we had kind of a double top. That was the high point before we had our most recent decline. The green line was sort of a double bottom near about 24, so just below 24. Those would be some key areas areas to watch here. But the first thing we have to do, clear that confluence of those three moving averages and contend with another situation of gaining momentum. Momentum is below the 50 midline on the RSI. That suggests we're towards the bearish side. Our moving averages are tilted down here. So that means our trend direction could be more biased toward the downside right now.
Okay. So what is BC Lund doing in Oklahoma anyway? Pretty funny. All right, so we're at the highs. I'm still not going to be aggressive. I consider credit spreads a fairly conservative trading strategy. If that hasn't been communicated effectively, it's a pretty conservative strategy for me, even though brokers will require you to have at least a level 3, I think, level 3 trading, options trading. So you can do credit spreads, iron condors, butterflies. You cannot do calendars or diagonals. I think you need a level 4 for that. It's a little bit more complicated. You might think that credit spreads are very complicated. It really isn't. It really isn't. So you think prices on Airbnb is going to go higher? So you sell a put. Okay, so obviously you don't want to sell a naked put, because your loss could be quite extraordinary. Like, we don't know. Airbnb could come out with some news and it drops down to 129 really quick. Not very probable, but it's possible. So the way to avoid that additional risk is you buy a strike below. So if I sold the 130, I sold the 129, by the way. If I sell the 130 and then I buy a strike or two below the 128, the difference between those two, 130 and 128, is the money that's held aside. That's my maximum risk. So I don't no longer have infinite risk. I have defined risk. Big difference. In addition, I can see a 3-day move off of the 50-day moving average at 130. I can see RSI turning up. Now, what I would like to see is volume turn, but as a function of price, you can see MACD is turning and stochastics in a primo area. This is Airbnb I'm talking about. I took that Airbnb trade. I just started with 2 contracts. Not a big thing. It's $180 in premium. Might not seem a lot, but if you go through the entire list of positions that I have posted in that new premium selling spreads channel, there's about $10,000 in profits that I'll accumulate over the next couple of weeks with very little capital. $10,000 put aside in capital with the prospects to make $5,000 or $6,000 in premium plus theta deterioration over the next couple of weeks. Pretty conservative strategy. Okay, so you have these gyrations where the S&P will move a few points, the spiders will move 50 cents, a dollar, and you get all nervous. Okay, new traders, you get all nervous because prices are not moving in your favor. Let's take a look at another example. Let me show you something that probably makes a lot of sense because many of you have traded Intel lately. Okay, let's say you have impeccable timing. I'm being sarcastic. Let's say you have impeccable timing and you bought calls up here at 51.28. You bought the absolute high of the day. Now, I'm being sarcastic. Obviously, you wouldn't want to buy calls at the high of the day. But if you did, a week later, you're sitting on a losing position. Okay, so you're not going to buy the high. You're going to wait for the pullback. I mean, this should make so much sense. It's like I want to slap people sometimes when that sounds condescending. Sorry. Just buy the pullback. Please buy the pullback, especially if you're trading options. Give yourself enough time for the trade to work. If you're just taking an option trade like calls or puts, your risk is much higher, even though if you get it right, that's great. The leverage is going to work in your favor, okay? But if you're not right, you could lose 40, 50% of your premium pretty quickly. So why not put the odds in your favor? So if you buy in the money on a bounce, your delta is going to be about 50. So there's a 50% probability that this trade is going to work for you if everything else, all conditions are in your favor. Let's see what the conditions are. Let's look at SMH. We want SMH to be moving higher. It is. Okay, so now you got one check mark in your favor. Let's look at some other names like AMD. We know that's moving higher. Good, moving back above the 21-day. All right, so you got stocks in the group moving higher. Okay, so you see what's going on here. Intel, we looked at NVIDIA, AMD, and SMH. So we got a lot of probabilities working in our favor. We bought a 50 delta call. It should work in our favor. Okay, you'll know pretty quickly if it's going to work or not. Now, the Qs are also moving higher, so that's going to help me. Also, the New York FANG is moving in favor. Okay, so the New York FANG. So you've got a number of bullish indicators. Now, what you got going against you is NAMO. NAMO has peaked. Okay, NAMO's peaked and it's turned down. Okay, NIMO is peaked and turned down. So you've got a headwind. So you really have to be good about your entry on the initial Intel position. If you're going to take calls and that's all you're going to do, then you really need to be good with your timing. So the other thing we got going on with Intel, not only with NVIDIA, AMD, SMH, and the chips, Micron's also moving. Micron's also bouncing. The other thing you got going for you, if you take an Intel trade, is that you bought the pullback. So it's already pulled back. I can't emphasize this enough. It's already done the pullback. So if I'm buying calls, I want to be seeing this move in the right direction quickly. All right, so now we got a spinning top. So I'm starting to read that Intel could just sit here at the 9 EMA, above the 21-day, but sit here. So if you bought the high of the day, again, not a good entry. You want to buy on a pullback to VWAP. Watch for the pullback to VWAP. Don't buy it just because it touches VWAP. Wait and see what happens. If we start to see buyers coming in, near VWAP, you'll see the volume pick up. Okay, so let's go there. All right, see the volume? Okay, so now watch volume here. Intel. If we come back, better entry. If we start to move, you're going to get the follow-through candle. Okay, so that's a call. You can also reduce your risk by doing a call vertical, by selling a call, say 5 strikes overhead. You get a debit. You get a credit for that, and that gives you a debit overall. Now, conversely, what I like to do is the following. Okay, initially, I'm looking at Intel as a trade. What do I want to do? I want to sell premium below 145. I want to sell I'll sell the 45 or the 44, maybe even the 43 put, and buy a put below that. Why? Because people will pay up for that put, and the same reason you don't want to buy a call at the high of the day, you want to be buying puts, or you want to be selling puts, because people who buy puts at the low of the day, that's a losing proposition. So you want to sell puts. In my case, I want to sell puts for a credit as price moves away, or even just sits here. The theta is kicking in. So the credit that I received, so long as this stays above, say, 43, I'm going to win. Okay, I'll probably have like a 15 or a 16 delta. That tells me I have an 84% probability of winning. Now, this is based on options. So you can take that with a grain of salt. It's based on the Black-Scholes method of calculating, implied volatility, what the expected move, what are people trading, what do they expect, and it's all figured into the price of the options. That gives you roughly a 84% probability of winning the trade if you sold, say, a 16 or 18 delta put down here at 43. So I win just like you win on the call side, but I don't have the theta working against me like you do. That's why I like to initiate an original position or first position with a credit spread. And then, and only then, if the stock continues to move higher, maybe I'll buy some shares and I'll sell a covered call overhead. Again, collecting a premium, effectively a dividend, looking for prices to move higher. Okay, so I start with a credit spread on a bullish position. I might also buy shares, you know, and look for the trade to continue to move higher. And just right now, watching the S&P. So I hope that didn't get too long-winded. And if you missed some of that, just go to the 10, right around 10:40. I start talking about credit spreads, why I would do something with Intel with a credit spread versus whatever. So go back to 10:40, and you can review that later when the session ends. You can review it over the weekend or whatever. You got the link to the current broadcast. Just scroll to 10:40. How can I tell if it's 10:40? Well, if you look at the video right down here in the bottom right-hand corner, if I turn this off, bottom right corner, you can see the time. You can see the time is 10:58. Okay, so just scroll back to 10:40, 10:35, something like that, and that's where I start talking about why I like to do a certain type of trade under certain conditions and what I look for. I'm always looking for something that's going to give me conviction, whether it's all the stocks in the group are doing the same thing, the sector is moving, or the index, or all of the above. The index is moving higher. Or I see big trades like AMD. I saw a big trade on AMD that Buford shared with us. Okay. So that trade on AMD, we saw 2100 of the January 12th. January 12th next week, right? So I sold the puts for January 12th, assuming that AMD is going to continue to move higher. So I sold puts, again, initiating a trade with a credit spread first to collect premium. With that premium, I can turn around and buy calls for a net, basically makes my position, doesn't cost me anything, basically, provided it continues to work in my favor. Okay, let me take a couple of minute break. I'll be right back. Why are you screaming at me? Why are you screaming at me? What did I do? Huh? What's wrong?
It's time to look forward. Find the next trend.
You hungry or something?
From every click to every tick.
There's no fear of missing out.
What's going on?
Next trend investment.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffee. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern. Only Schwab Network.
All right. You know what? Let me take a break like I said I was going to do. I'm just going to freshen a drink. Give me 5 minutes. I'll be right back.
Seeing a CNBC reporter via Twitter here, Bob Pisani, talking about possible Bitcoin ETF approvals. He says we're expecting maybe something this weekend, most likely Monday or Tuesday, though.
Throughout this show. In the meantime, the big three will chart, trade, Texas Instruments, Paychecks, and Lend Research. Today's disruptor service now. Jeffrey's raising the price target there. And 360 round Constellation brand, those earnings and other beverage stocks to keep an eye on. In the meantime, as you see that jobs report, so you get more jobs than expected wage growth is something people are focusing on. Fewer people in the labor force. Right now, you're seeing up arrows, but still a down week on Wall Street after 9 weeks of gains. The S&P at 47.19 at 30 points. The Nasdaq at 126. The Dow up 112 points. And the Russell is up about a half of 1%. Meantime, let's take a look at oil and gold. So higher today. And the U.S. dollar pulls back 101.82. Gold 20 $14.61 a troy ounce. That's on the half of 1%. Oil at $73.63 a barrel is 2%. Bitcoin is down 675 at 43,955. And it's worth noting that that March rate cut likelihood continues to drop. We'll have big discussions all about the jobs report and the Fed in the show. In the meantime, joined by Jenny Horn, correspondent here on Schwab Network, taking a look at Constellation Brands reported earnings this morning and some of the reaction as well. Good morning to you, Jenny.
Good morning, Nicole. And this stock has been quite all over the place, frankly, this morning on what was a mixed third quarter from the beer and wine make producer. We did see they posted better than expected profits with sales that did disappoint expectations, although it did rise from a year ago. Well, they did lower now their full year guidance. So they did post a net income that came in around $2.76 per share. That was up from $2.52 per share a year ago. Adjusted earnings did also exceed forecasts. And their CEO did highlight that Modelo delivered double-digit volume growth and retained its position as the number one beer brand now in the U.S. by dollar sales, while Corona and Pacifico were also top 10 share gainers in the U.S. beer category. Modelo has been really able to serve as like what has been Anheuser-Busch's loss has been Modelo's gain, because they had been competing really for that top spot with Bud Light, which has then seen some significant fallout, obviously we've discussed, just as a result of overall some PR backlash, but we won't get too much into that. They did say that overall their conviction in the beer segment now is going to be strong into 2024. So they adjusted their guidance as a result of some weakness in their wine segment.
Okay. Good job.
They did fall about 8% as shipments were down over 11.5%. Depletions were down 10%, and they did fall almost 8% in the previous quarter. So that has been consistently their weak spot, which dragged.
All right.
They have to figure out a way, I think, to make those wine spirits as perhaps interesting to the consumer as it seems Modelo and Corona are right now.
All right. We're starting to see a little bit of profit taking up here at the high of the day. Not surprising. You shouldn't be surprised. S&P, a little bit of profit taking. I mean, we had this huge bump back above 4,700. So what's the bottom line for me? We need to close above 4,700. Just make it simple. Make it simple. It's a lot easier to make decisions, okay? Instead of doing a coin flip, instead of taking a coin flip, know where your benchmark levels are. My benchmark level is pretty obvious, 4,700. Pretty clear area to get risk off. If we drop again, we drop below 4,700 by the close. So there's no guessing. All right, let me just show you something here.
But they're not alone in that thinking. Most of the analysts are pretty upbeat about this stock now into the new year. All right, thank you, market correspondent. Appreciate it. And as we see NVIDIA with an up arrow, in fact, every single.
Okay, so let's see, 46, 46.25, 46.50, 75. Okay. Let's do this. All right. So let's say you are thinking that we're going to follow through end of day into next week. All right. So looking at the current situation, here is 4,700. We're above 4,700. You can see that there is 221 million in gamma, or delta rather, 221 million deltas. And you got 152 million in deltas in calls, 221 million in put delta. So what does that mean to me, Benny? It means that's why we're looking at this as a critical area. If we stay below it, risk off. If we can stay above it, risk on. Why? Because there's a lot of puts and calls right here. So there's a lot going on. Think about it. If you have calls and we're moving away from 4,700 in an upward direction, your calls are gaining in value. if you have puts and prices are moving higher, your puts are losing value. So let's say those puts expire today or maybe next week. You might be keen to take profits, whether your puts or calls. You might be keen to take profits. That creates a mechanical process where the dealer who's on the opposite side of the trade, if you buy a put, you're long puts, he's or she is short puts. So if you cover your position, if you close your position, you monetize your position, the dealer no longer has to have the hedge on their short puts. Okay. If you're long calls, the dealer and you close, the dealer is no longer short those calls. So that frees up the hedge. So if it start moving higher, we start to see the dealer buying deltas as we push up. So that helps to push the market higher. So that's just one part of the mechanism. So if you're looking at gamma, we update it every day, gamma, every morning. How does that help me at all? Well, it basically tells you where to expect support and resistance. It doesn't give you direction. We can only extrapolate direction by looking at how they close and roll their calls and puts. Do they close and roll their calls higher? In which case, the call wall, excuse me. In which case, if they're rolling their calls out and up, out in time and up in price, and we start to see prices moving towards 47.50, we can see the call wall shifting higher. Currently, the call wall is at 4,800. That's resistance. The put wall is much lower, but we have this transition point at 4,700. Equally, you can see calls and puts. Calls are in orange, puts are in blue. We want to see that kind of price action. See over here on the right, see how there's very few puts being traded out there so far. So that tells us there's not a lot of structural support out there yet. You got people buying calls, but not a lot of puts filling in. So we want to see this fill in with puts, and we want the call wall to shift from 4,800 to 5,000. What will that do? That'll tell me through January, February, maybe March, as the call wall starts to shift, we start to see potentially the call wall shifting up, meaning institutions are lifting the ceiling to where we can trade to instead of downward. We don't want this call wall to shift from 4,800 down to 4,700, 4,750 or lower. We don't want the call wall to shift downward because that tells us they're lowering the ceiling. Okay, so gamma, all it's telling you is where's current price action and where is my support and resistance. It's not telling you direction. You can only extrapolate that from the movements in the call wall and put wall. Okay. All right. Enough of that. So current trades right now, if you took AMD, let me take a look at AMD. AMD. Okay. AMD is moving in the right direction. So we sold a 135 put. We bought the 130. Some people want to take a more narrow strike. This is what's called a $5 wide. So I sold the 135, I bought the 130. The 130 gives me protection for any kind of downward movement. If it started to move back towards 135, I would take the position off, or I could roll the position down. I'd probably just take it off. So AMD looks fine. And we got this additional, impetus in that CES is probably going to see tech stocks move higher. It's fine to think, okay, my opinion is tech stocks move higher. But we need to see price move higher. We need to see stocks in the group move higher. And we need to see premiums moving higher. Okay. So all these things stack up in our favor. And what's NVIDIA doing? NVIDIA, where are you, NVIDIA? I have an NVIDIA position as well. Whoa, there goes NVIDIA. Yikes, a B. All right. Nice, nice. NVIDIA. Okay. Okay, NVIDIA is at max profit, so I need to roll this position up or take profits in NVIDIA. And where are you, NVIDIA?
Installing Windows, charging something like $100 a window when other guys were charging $400. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of it.
Okay, I just rolled NVIDIA up. NVIDIA just rolled it up. NVIDIA just rolled that call, that vertical up calls 12, 112.
A fresh take on the hottest trends in the market, from every click to every tick.
There's no fear of missing out on next gen investing. 1 p.m. Eastern, only on the Schwab Network.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close.
That was a $2 credit. Okay.
Accelerate your market knowledge and shift your perspective into full view. Real-time sample trade, 4 hours of trading insights. I'm Tom White. I'm Kevin.
Order status.
Catch me on Fast Market, weekdays at noon on the Schwab Network. Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
For a $2 credit, just rolled up.
Welcome back to Trading 360. I'm Nicole Pavlidis, live at the New York Stock Exchange. Time for the big three. Three stop, three charts, three trades, and the consign will take us through the chart. Here to take us through the trade, Tom O'Brien, CEO of GSA. And great to see you both. Tom, I'll start with you because we got that jobs report, and Joe Bruce-Wales is making the point that the productivity number, which basically is showing more output per worker. And he said that the trading desk loved that kind of number, and it reminds me of the 1990s. And that was one of the numbers within the jobs report that brought some optimism. What did you think of the report overall, and how's your feeling about the market?
I like what he said, because even when we took that acceleration up, Nicole, in the last part of last quarter, that felt to me like a 1994 to 1998 market. Now it did what it was supposed to do. There's no doubt that the AI deal, I know it's a lot of hype, but we are going to get more productive.
NVIDIA rolled out a week for a $2 per contract credit.
We might, go over 20%. This is a good market. This is a strong market. Right now, I don't think there's enough fear in the market to get going to the next step. That's why I'm going short these equities. There has to be a little bit more fear in the marketplace. If we get the fear, bang, that's going to be the next leg up.
All right. Let's get to this 20%, a possible year of 20%. Wow. Let's talk about Texas Instruments. That's the first thing that you're focusing on today. Why is that?
You can sell this here. Bottom line is that it's had a great bounce. There's no doubt about that. It's come up to almost where it gapped down from, about 6 months ago. It came back the last few days with volume again. You can sell it here at the 165. You put a stop at the 168. And I'm looking for 157. Now, that's not a big trade, but the 157 is where you went topside from, and there's good volume there. And what markets love to do...
Markets. Sounds like he's from Boston. Markets.
All right. What do you think when you look at this, Ben?
All right, we're still consolidating at the highs. Probably not a bad idea to take some profits off.
This week, 172 down to 161. We do appear to be holding these lower levels. So again, a bit under pressure, not exactly what the bulls are looking for to begin the week, but you can see trending lower here. And as long as we hold below 167, I think we're still, again, a little bit under pressure here and looking for a bit of recovery. But take a step back, away from the 5-minute candle chart. Now we've got an hourly candle chart showing here, and you can see we're going all the way back to the end of October, beginning of November, and on this 60-minute chart, you can see migration value to the upside. So we're actually just working our way into a key area, which could be.
Okay, looks like a little bit more than just consolidation right now. They're starting to sell a little bit up here.
With this trend to the upside. So again, just one of these stocks where, with that recent weakness, very important to be time frame specific when you're talking about the trend or the direction in terms of conviction. And here you can see as we step further back, quite a few steps back here actually in the weekly time frame. I just want to show you
Red tickle at minus 800.
value to the upside. So yeah, a little bit of weakness as of recent.
All right, a little bit of selling there.
I think the longer-term bulls still remain in charge here and still remain intact. Is this longer-term trend? Get back above 168 before you open up the door for retest this upper extreme that we saw into the middle of 2021, beginning of 2022, which is up around 200.
Rolled out NVIDIA vertical.
What you have here is that after we made the high, you have actually, you have 2 higher highs and 2 lower lows. And technically, for a downtrend, you want 3 and 3. We don't have that yet. So we'll see where it takes out. It didn't have enough volume even on the monthly when we were going up last month. And last month was an awesome month. So when you don't get something like that on a monthly, that's telling you that you still got some weakness that's involved there.
All right. I see an underweight from JP Morgan on Paychecks where they lowered their price target to 126 recently. A hold from Stifel and neutral from Citigroup. What is it about Paychecks that's jumping out at you? I mean, it had a little bit of a run up, and then on the earnings, a leg down.
It did. And with Paychecks, what you have, you're at 118.35. You can sell it here. You put a stop out there at the 119.50. And with Paychecks, that last low is a high volume low. First you gap down, then you have a high volume low, and a high volume low loves to get tested. Now that's technically. Fundamentally, Paychecks is going to have some challenges because you saw that OpenAI, bottom line is that they're opening their app store in the next couple of weeks. And I suspect inside that app store, one of the first things you're going to see is payroll services. And they're going to be so inexpensive because it's so easy to do. So our company happens to use Paychecks, and I love it. But that's one of those deals, Nicole and Ben, that, like when you've been doing it for so long, you just don't change. But I think that's an aspect that, if you can just put numbers in, and instead of paying, $200 a month, $300 a month, you might be paying $30. They have some challenges ahead of them.
All right. I gotta write down these. Trades later. I'll do this later. I don't need to do it right now.
We've got a little bit of pressure here on the 5-minute time frame on the more intermediate as well. We'll get into longer term in just a second, and we can dive into first and foremost more granular here. A similar pattern in terms of what we were just talking about a minute ago. With weakness in Texas Instrument, this is a look at some of the selling. Some of the selling we've seen to begin the year. The 5-minute time frame, you can see high conviction on the left side of the screen on Friday into the lows on Wednesday this week, and you can see mostly consolidation around 118. Tom's talking about selling the stock as it comes under pressure here. And what was that area, Tom, you mentioned? I think it was 119.50. I had my eye on the. Let me just see here. 15-minute candle chart shows us at 120, basically the same area that Tom's talking about. So that's kind of the line in the sand in terms of some of the momentum we've seen to the downside here, right? If we were to get above 119.50, I think Tom said, I've got it again as 120 here. I think we'd be kind of potentially reversing this weakness we've seen. This chart here, again, a 15-minute candle chart going off the highs of itself around 130. That was in the middle of last month here. One more step back as we get into the daily candle chart. This is where things look a little bit more bullish to me, Tom. I've got a nice high conviction trade to the upside and then sideways consolidation around 118. I do see the significance associated with this level that we're trading right now. I think it's somewhat pivotal, but again, I think on this longer term chart, the bulls still remain in charge.
All right, so if the bulls are in charge, your final thought here, Tom.
There is support, as Ben said. There's support right where we are. I mean, where we are here, if we go back 3 months, it traded at this level for a good couple weeks. So normally, in order to break down, it's like a apartment building. You're coming down.
Apartment. Let me see this guy. He's got to be from Boston.
So there's some support right here. There's no doubt.
Oh, he doesn't look Irish, but he does sound like he's from Boston. All right. So they're talking about Lamb Research. Let's take a look at Lamb Research. The chips are doing really well. We got CES next week. All right. So Intel looks okay, but I like AMD and NVIDIA. NVIDIA. AMD looks good, right? Okay. So ideally, by the end of the day, we want to see volume up here near 75. Let me just check the relative volume on AMD. AMD relative volume. Markets. Tell me this guy's not from Boston.
Sellers at that particular point. So I'm looking for this to get to the 708 area.
Yeah, understood. All right. I mean, we know that the way semiconductors kicked it off, I mean, there was a headline on the 2nd of
Okay. Ideally, what would be great? Okay, we got NIMO turning back up, so that's good. NICE, the summation index, however, is still trending lower, peaking anyway. So got to keep an eye on that. AMD, I want to see AMD here.
I think the longer term, it tells a little bit of a different story here, but the move lower nonetheless from 800, this 795 area, all the way back down to 723.
Yeah, relative volume's not huge on AMD. Okay, so AMD, they're talking LRCX, Lamb Research. Yeah, he's talking LRCX, right? Yeah.
Also show you how it looks like we're just kind of testing the lower extreme of the range that we've been in, going back to, we're talking about the middle of December after that breakout we saw through 720 to 730. Kind of paused here prior to that run up to the $800 level. And here again, if we find some support right now, get back through 760, we can open up a door for a retest that upper extreme, the highs we saw just last month here. I think it was the 28th headed into the end of the year. Take one more step back from here to see another bottom left to top right corner type environment playing out.
Disney Moderna trying to break out. Sorry. Moderna trying to break out. Disney still inside of yesterday's price action, inside of Wednesday's price action. Yesterday we came down and dipped right down to the low of the week. Disney looks like it could bounce off of this area and push higher. It's above all of the buying at the low of the day from yesterday. So buyers continue to be interested in Disney at this level. So I'd just like to see this push higher. What is Bitcoin doing? Bitcoin trying its best to get to 50,000 Bitcoin. It's currently coming back a little bit at the moment. If Bitcoin, did they mention anything yet, Mondo? I don't know if you're listening. Did they mention that approval yet? They're supposed to announce an approval.
CEO saying yesterday the company has seen significant business impact from the war that's happening in the Middle East. So the stock
Yep.
another downgrade and is under
I'm thinking the same thing, Joel. That treasury trader might have been out before, more than likely got out.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Yeah, everything's cool.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime.
That's a good idea, Coinbase. Now, here's the thing with Bitcoin. Now, me personally, I can't tell you what to do. I would never do that. We're starting to fade a little bit more on SPY. If we get an approval announced about the Bitcoin ETFs, supposedly that was going to happen today sometime. If we get that approval, I'm probably going to sell the news. Okay, so yesterday, sources reported that Bitcoin spot ETF is going to be approved by the SEC for multiple firms' applications. News is expected today. That's from a senior crypto reporter, TechCrunch, over at TechCrunch. So sources report that Bitcoin spot ETF is going to be approved by the SEC for multiple firms, probably later in the latter half of today. If that does happen today, maybe it happens over the weekend. I would probably sell the news because this move higher is probably in anticipation of that ETFs, and then maybe it goes higher. Maybe I get out and miss the big move, but I'm probably going to take profits on the news, and maybe I take half off. I have BITO, I have HUT, and I have MARA. All right, all of those are calls, so I have limited risk, but could benefit maximum if we do pop. I'll sell those. Maybe I'll put a limit order in to sell.
at each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Available anytime, anywhere, any device, for free. Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalini, live on the floor of the New York Stock Exchange. Look at developing stories. Kevin Green is with us, senior markets correspondent here on Schwab Network. Yesterday, the stock CEO saying that the business in the Middle East has dipped. There's been ongoing conflict, some reports that have been detrimental, boycotts, things like that, downgraded over at Oppenheimer. What are you watching when it comes to McDonald's?
Yeah, we continue to see the shares slide here, down about 1.2% in the session, and this is after Oppenheimer did downgrade the shares to perform from outperform, and they did not provide a price target. Now, this is a pretty big shift, Nicole. Last year, this was on their top 2023 list. It came within around 7% of their price target here, but we are seeing a little bit of a reversal. They find it very hard right now to identify a catalyst that might offer McDonald's into 2024. They believe that some of the pricing increases that has benefited the company on a top line standpoint may not actually pull through for them this year, and they do believe that same store sales are pretty much going to be flat on a year-over-year basis. So the growth prospects are a little bit of a challenge here for Oppenheimer. We are seeing the shares pull back here a little bit, especially after that LinkedIn post by the CEO yesterday, and hopefully we start seeing maybe a little bit of a floor when it comes to McDonald's here in the near term.
Right, understood. All right, what about Boeing? That's making some news today.
Yeah, definitely. So we are seeing Boeing. This is going to be a little bit of the opposite here. Wells Fargo actually did increased their price target on Boeing to $280, and that's up from $230 here. They also do have an overweight rating on the shares. Now, they are very optimistic when it comes to the opportunities of being able to now deliver their airlines, deliver their airplanes in China. And they do believe that that's going to actually unlock some pretty significant value when it comes to free cash flow. They do predict that the 737 line, if you will, or the 737 model could actually unlock around $500 million to $1 billion in 2024, and the 787 model could actually unlock around $500 million in 2024 as well. So just the opportunity to continue to sell in an area that's been restricted has been a little bit of a tailwind, and I think that's going to be a key reason why a lot of investors might be looking at this name again, maybe to catch a little bit of a bid and hopefully trade up some of the old highs that we saw over 2 years ago.
Okay, Kevin Green, thank you. Senior markets correspondent, appreciate it. Good luck at two important names. Time to spotlight what's going on. Dividend stocks, S&P Dow Jones putting out its quarterly and year-end analysis of U.S. dividend activity. Joining me right now, Howard Silverback, with a senior index analyst at S&P Dow Jones Indices. Thank you for being here. So the dividend activity that we're seeing, I mean, for example, we saw a big cut yesterday from Walgreens Boots Alliance. I mean, I don't think anybody expected that one. Tell me a little bit about some of the headlines and what you're watching when it comes to the dividend.
On the Walgreens one, there was some expectation of that. They have not been doing that well. We've seen that in the equity price. Let's say yield was so high. Dividend investors should realize, obviously, that there's nothing for nothing. So if you have a high yield, that's an indicator something's going to happen. As far as the overall dividend market goes, it was very good. We posted a little over 5% gain in the actual money that you got in your hands. The dividend payout was 5.05% higher in 2023 than you did in 2022, which is good. It's down from the prior year's 10% gain. The company a little bit more cautious. So dividends have been pretty good. They're slow, they're steady. What we have noticed is that the amount of your increase has declined significantly. It's not that companies don't have the money, it's not that the cash flow is not there, but they're very cautious. They don't know where they're going over the next year yet, so they're not putting as much of an increase. Unlike a buyback where you can turn it on and off by a call to the traders, once I increase your dividend, you expect it the next quarter, and next year after that, you probably expect an increase. So there's a lot more caution on dividends than on buybacks.
Right, understood. Okay, so that being said, how do you feel like the market? How are we faring? I mean, what comparisons are you doing to help the story?
Basically, the earnings estimates are good. Obviously, they're still cash flow has been good. There's good cash on the books for companies. We have more companies that are increasing each year, but again, the increase amount is less. At this point in time, we have no doubt that 2024 will be a record year. Again, we've already had a lot of declarations into Q1s, and companies do not typically cut once they start declaring positive increases on them. What I would look to is the end of January and February. That is the busiest time for dividend increases. Companies have end of the year, they're doing their 10K, and they're talking to shareholders with the shareholder meeting coming up. There's no better time to increase the dividend payment than right before you meet the owners. So February typically is the busiest amount. We are looking for 2024 for about a minimum of 5.1, 5.2% increase. I say minimum, with the economy, if it picks up, we may get a stronger number farther into the year. But 5% seems like a very good base number out there, which would just be about flat increase from this year. But again, more than inflation at this point.
Right. And you said it's going to be a record year in 2024. So what will drive that? Can you be a little more specific on that comment? Because I think people like hearing it. Let's hear some more about that.
Yeah, specifically, I would see S&P 500 which dominates a lot. Obviously, they paid $580 billion last year, or $618 billion this year. The reason for that, again, is that the cash flow is there. More than covers the earnings actual cash flow. Dividends are a cash flow going forward every quarter, all the way down the road. So the earnings are good. Companies have excess cash they can still do. Some sectors, though, we have some concerns about. The financials, we think will continue to increase, but pull back on buybacks the way they did a year and a half ago. They kept the dividends, so that's a good item. Buybacks and dividends easily win. Some of the energy stocks have been going down on their payouts. A lot of them have moved to a payout amount as compared to a set quarterly item on there. So we've got to really look into that. If you buy a fund, you need to look how it's produced. If it's all utilities, then you might as well buy a utility company. Financial. Again, dividend stocks, most of the investors are looking for income. The old saying is that I look up the income, my kids worry about the taxes. So you want to look for a company that you believe in, basically, going forward. If you're doing a fund, one that's diversified, the companies have shown a tendency to increase year after year. It's nice to have dividend aristocrats for 25 years, but a company that's increased 10 years in a row, it's part of their culture. They're talking about it. They're not going to pull back.
Right, understood. And when we talk about an election year, how do you think the markets do when you look historically? That's something that you guys pile up in. How is 2024 figuring out that? It's a great year. Now we have an election year after a first-term president, that kind of stuff.
Right. Yeah. Well, obviously, 2022 was a very bad year, down 19% last. 2023 we were up 24%, so that was always good. But as far as our election year goes, S&P 500 itself has not gone down since 1944 in an election year for the second run.
What time is it? 11:40 already? Wow. 11:40.
What we have seen is that Q1 has a tendency to be flat or down, and very often around Super Tuesday, not that much data on it, but around Super Tuesday, the market also goes down. But for the year, it goes up. Several reasons that we think this year will be good. Mostly the expenditures are still there. You still have the legislative, the CHIPS Act, the IRA, there's still COVID money going out. And Washington has a tendency to spend a little extra money in a presidential year if the economy starts to drag or not show growth in order to get those voters out and change the mood on that. So we think the expenditures there and the dividends are there, but the difficulty is that companies don't all have a high degree of confidence of how it's going to go out, not just for 2024, but 25 and 26. Again, a dividend increase is a commitment going forward. Same way you have an employee or rent or product cost. So you've got to plan for that in your cash flow, not just for the quarter, but the 5-year cash flow projections.
Yeah, I got it all about the expenditures and everything. But you said the difficulty is companies don't have a high degree of confidence.
All right, so got sidetracked there. Sorry. Just looking at a few things, responded to a few tweets. All right, SPY continues to fade. SPY continues to fade.
Good point. Great point. Howard Silver Black, great to see you. S&P Dow Jones Indices. Love having you on the show. Thank you for the perspective there on dividends, earnings, the market overall, and historical perspective as well. Coming up next, Disruptor. ServiceNow is up more than 55% year over year. Just got a price target hike over at Jefferies. George Solis is standing by. He'll look at this stock. He'll have an example trade for us. We'll be right back here on Schwab Network.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through weeks so long. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was hurt, we were able to help her before. Your client won't care how much you know until they know how much you care.
Okay. AMD, just watching AMD here.
Binge watch the market with the Schwab.
AMD.
Tune in 24 hours a day, 7 days a week at SchwabNetwork.com to get all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device, for free. Schwab Network.
Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern, only on Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Download the Schwab Network app and join in
All right, let's look at a few stocks that are seeing
anywhere on any device.
a lot of chatter. AUPH. All right, looks like that might reverse. Pharmaceutical. Palantir is getting some chatter. Let's see. That's don't see anything to do here. Palantir. Oh, good. I sold that a while back. I thought I still had a position in Palantir. No, I sold it. I sold it when it started losing it. Back over here. Okay, SPY. QuantumScape. QS. Okay, this little dip here. I'm going to go ahead and buy those covered calls back that I sold on. Yeah, I'll go ahead and close that. Looking for a bounce in QS. Maybe back to 10. QuantumScape. All right, that's one. AMC seeing some elevated chatter. That's dropping off. RCAC. Now keep this with take this with a grain of salt because stock twits tends to have more amateur traders. Peloton chattering about how big their positions are and boasting about their bullish position or bearish position or whatever. All right, so I'm just checking this out because I see a lot of chatter. I just want to see if there's anything worth. NVIDIA definitely worth chattering about. And Green Brick Partners. Greenbrier. Big pop and a fade. So there's a lot of people taking profits. People seem to be taking profits. I think it's a good idea. Take profits. Ask questions later. Shoot first, ask questions later. As the saying goes when I was growing up as a kid. Looking for a bounce. Or somebody took some profits off up at the highs. That makes sense to me. All right, let's go see what the S&P. Let's go take a look at the FANG index. If you're trading any of these FANG stocks, got a nice little bounce. Did make it above yesterday's high, but still looking neutral to bullish. RSI's turned back up. Okay, now this is good. This is real good. Now we've got stochastics completely oversold, so that's good. All right.
Between now and expiration in 3 weeks. If the stock does move down, break even is at 654, and your total return is $6, but your risk is $14. That's if the stock goes to 640 or lower by expiration. So if you don't necessarily want to take that risk, potentially earnings is 2 days before expiration, so that's something to consider.
Okay, so we're oversold again, folks. This could turn out to be a bullish event. The only issue I have now is NYSE and NASI are both oversold, or both turning from overbought territory. So that could be a headwind into next week. Charles Schwab needs to come up with some new commercials. They just keep talking the same thing over and over and over. Financially, I'm a flight attendant. All right, let's see. That goes right there. All right, so the fact that stochastics is oversold now and RSI is turning back up is a good thing. 10-year peaked at 5%.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market. Weekdays at noon on the Schwab.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds.
This looks really good. Stochastics looks really good. Okay, so that's what we got to deal with into next week. All right, so that looks good. What about... Okay, let's see. Let's go to the S&P. S&P. Where are you? S&P. No hurry to do anything at this point. I put on a trade on AMD. Okay. That's today, right? Yeah, the 5th. Okay. Yeah, stock charts has been weird lately. It takes like 5 or 10 minutes for the current day to update. It's really weird. Their service. Okay, so 1618 puts us up here at 49.16. If we can get above 4,800, that's the key level right now. Okay, so far. A little bit more than 2%. RSI is still above 50, though we've had some divergence. Okay, once again, we've got this condition where we're getting oversold again, like the New York FANG index. That's only 10 stocks, but this is starting to show signs getting close to oversold, which is we've been waiting for that during the week. if you recall. We've been waiting on this condition for stochastics to get oversold. So that looks good. All right, so that's good for next week. Okay.
No, I mean, I think it was sort of a mixed bag, but the positives in the release outweighed the negatives. So I think that's why you're seeing the stock react the way it is, trading higher. But we view the stock as fairly valued. Our big concern with it, well, there are two things. First, their net sales growth, the top line growth is slowing from the rates that they've posted over the last few quarters. Overall net sales growth was up only 1.2%. The last two quarters, they've posted net sales growth in the 6 to 7% range. So we're a little bit concerned about that. Obviously, last year was a year of tremendous market share gains. You had the Bud Light boycott, debacle, which they really benefited from. And looking forward, that's going to make growth comps more difficult as that event annualizes, from last spring. So, and the other thing is they are in the process of a major capex cycle. They're expanding a brewery in Mexico. It's a $4 to $4.5 billion project, and that won't be completed for another couple of years. So that's going to weigh on their overall free cash flow. But overall, this is a solid company, but in a sector that we're not really positive on right now, consumer staples.
All right, so the channel that I created today, if you can do me a favor, don't post anything in there. I just want to post the trades that I have and the conditions for taking the trade. Commentary, let's cover in the main trading room, okay? All right.
That's going to do it for us here on Trading 360. I'm Nicole Kennedy. I'll see you at 2 p.m. Eastern time for the watch list. Keep it right here. Fast Market is next.
All right, so I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Friday, the 5th of January. First full week of the year. And what have we done? What have you done for me lately? Was that Janet Jackson song? Or Barbara Streisand, you don't buy me flowers anymore? 1 week into the new year. And we've had a almost a 7% gain or 16.5% gain. I think these levels are off a little bit. So we had more than a 16% gain since the October low. Okay. So a lot of times, if you're a new trader, you get upset, or maybe you get anxious, or you feel anxiety because the market's pulled back a couple of days. That's a common emotion. All right. The market's pulled back a couple of days. Most people want the markets to go up. So most traders, most investors, or are bulls. They're long most of the time. Okay, so we just keep it in context. All right, we've gained more than 16% since the October low. Yes, we've given back 2% and change. You probably get tired of hearing me saying it, but for the previous 2 weeks prior to the end of the year, we said, please take some profits off into strength, reduce your risk. 4,800 is major resistance. We don't see us getting above 4,800 in the short term. 4,700 is major support. So what? We pull back a little bit more than 2% after a 16, almost a 16.5% gain. That's not bad. So let's say that you've done nothing. You didn't take I don't like to use the word advice because I'm not a FINRA registered advisor. The suggestion, you don't act on the suggestion or the news on the actions that I'm taking. I'm just telling you what I'm doing. And over the years, I've found that taking profits off into strength and letting some things ride is the way to make money. Not every trade is going to work. Not every trade is going to go to the highs or give you exactly what you want. Now, with that in mind, I like to do credit spreads, iron condors, butterflies, etc., because of the very nature of what I just got finished saying. The markets are not going to go straight up every day. And when they go down, they're not going to just waterfall. Most of the time, it's going to be pretty orderly. You can see the price patterns back in July, August, September, into the October low. Now, if you are long, constantly long, and you're not taking profits off into strength as RSI gets, into the 70 zone, or stochastics gets overbought, then you're just one of those traders that put out the question, why don't you just stay long? Why don't you just stay long, Benny? For different reasons. I mean, I'm not always long. I mean, sometimes I'm long and then I'll start reducing exposure like we did the last 2 weeks going into the end of the year. I'm more active because I'm here every day. I mean, I could very well just take a longer time frame if I'm going to do calls and I think the market's going to continue to move higher, or if I think, we're going to consolidate here, I can take credit spreads way out in time, like 6 months out or whatever. But that's not my style. I like to trade. I like to be here on a day-to-day basis and look at the markets and give you areas where we think we might see a pivot. Okay, so here's October. You can see stochastics in the lower panel. What did October bring? You're too loud there, dude. Okay, he's too loud. Let me bring him down a notch. Okay, so in October, what happened? Stochastics was oversold, MACD was oversold. So we don't have both of these in the same condition just yet. We had more selling. Look at the selling we've had over this week versus the buying in the previous 3 weeks. Okay, so what does that tell me? It tells me that the risk is much higher. So we need to keep an eye on the markets. If we lose 4,700 decisively, and there'll be a lot of selling that comes in. There will be selling because we have a lot of in-the-money calls for the January OPEX, a lot of in-the-money calls. So they want this to move higher, whoever has those in-the-money calls. If the markets start to move lower, those investors or traders with deep pockets will probably take those calls off. they'll probably take profits, in which case it turns into some supply, into some selling. So dealers will wind up selling. Now, this is only if we stay below 4,700. Okay, if we stay above 4,700, then we have the possibility of continuing higher. I don't put too much weight on that happening. I'm putting more weight on they're going to continue to sell. Look at, they sold into strength, and now this continues to fade. So what would I do in that case? What would I do if I thought the market's going to continue to fade or at least consolidate in this area? Well, what I'm doing, you have to just check yourself. This may not be what you want to do, but in the case of Apple, for example, this is taken yesterday. The picture is taken yesterday. Apple, I'm looking for it to pull back. So I'm selling a call overhead at 195 and buying the 195. I did earlier in the week. I sold the 195 call and I bought a 200 call for a credit. So while I'm waiting for the markets to give us clear direction, we have Apple doing precisely what I'm looking for with this call credit spread. Call credit spread. I'm looking for price to stay in this area. Even if it moves lower, unfortunate for the bulls, but it's actually fortunate for me as basically I'm short Apple. I'm collecting a premium. I short the 195 call and I'm long the 200 for protection in case we wake up one day and Apple's above 200. The likelihood of that happening is probably about 10%. Now, it would have to happen before expiration. So if the markets start to fade more, I want to do more of what I'm doing here with Apple. Okay. I'll look for Apple to, at a minimum, looking for Apple to just stay here. As long as it stays below 195 and just sits here, Apple, what's the theta? Theta is $4 a day. Well, that's not this expiry. That's, actually it is. Okay, so it's $4 a day on Apple while it just sits here. Well, it doesn't seem like a lot. If you got 5 calls, it's $20 a day. Okay. And I have protection on any move to the upside. So I'd have my maximum loss if I made it all the way to 200. I would never let it get to that point. If Apple started to bounce and it looked like it was going to take out the 50-day, look at the 50-day. So if I'm selling credit spreads, in this case, I'm short a call up there at 195 times 5, and I'm long the 190. So what's right there in front of 195? Well, the 50-day for one, the 90 MA, the 21-day, and these wicks right here. These wicks where price action tested the 21-day and finally fell through. So in order to get to 195, we need to make it through the 50-day, the 90 MA, the 21-day, and this price action. I just don't see that happening before my expiration. Now, with that said, RSI is now oversold. So as I monitor this trade every day, all I need to do is look at it once a day. I mean, can you see how easy this is to monitor? I mean, you come into the day and you see Apple down here at 182. You take off, you do the rest, do your thing the rest of the day. Maybe you check it at lunch, and if you're anal, you'll check it in the evening. But the likelihood of this bouncing up to 195 is remote at best. It's more likely that we're going to stay near 182, maybe test the 200-day, maybe even lose the 200-day. I doubt we'd lose the 200-day because RSI is oversold in such a situation where we're probably going to see RSI start to strengthen. Price action, you can see the dojis here. They have 3 dojis. So for 3 days in a row, we've had, a toss-up. And the 4th day, 4 days prior, we had a spinning top. So we had 184 up to 188. Pretty narrow price action at the 50-day. So if we look at stochastic, guess what? Stochastics is set up in such a way that we could see a bounce in Apple pretty soon. So I may go ahead and take profits in Apple, which is up 30%. The credit spread's up 30%. Probably a good idea to take the profits off if stochastic starts to turn. Now, conversely, even if stochastics does turn up, it'll put a little pressure on the premium or the credit that I have, but I really, really doubt by February 16th, or let's say February 1st, because the last 2 weeks of this option that I'm holding, or these options I'm holding, the last 2 weeks, data is really going to kick in. Right now it's $4 a day, but it'll probably boost up to $10, $15 a day. So the value of that credit spread is going to be in my favor. I really don't see us getting towards the 195. So that's what I'm doing as the markets continue to move. We're giving back all of today's gains. So what does that tell you? It's telling you that the institutions are back below 4,700. This is not good price action. All right, we're back below 4,700. Back below 4,700. All right, so most people will be like, all right, so we're 4 days off of the high. What do I do now? The way I look at it, you could have several different ways of looking at the markets right now. Okay. If you are more of a position trader, maybe in 401k, you were taking profits off into your 401k into the highs, and positions like TRBCX giving you another area to re-enter. So you sold near the highs of the year, right around 149. So that's basically a 50% gain from the October-November 2022 entry level that we took a year later. Okay, so 50% gain. That's not bad. It's not bad for a long-term 401k type of position. Okay, so let's just stick on the topic. We're a 401k, or we're managing people's money. Not really any reason to do anything except maybe take a little bit off, because you are up 50% from the October low over here, October, November. You're up 50% and it's starting to pull back. So maybe you take a quarter, 25% of your position off. What if we bounce and we start to move higher? Well, we got to get back above 4,700. So if you're 401k, maybe you're thinking about taking some TRBCX off. I will more than likely take some TRBCX off. I already took some off towards the end of the year. So I'll be left with about 25% of the normal size that I would like. I'd like to have, a couple of hundred shares of this. So, so I'm selling in 50 share increments, basically. 401k, not really that concerned, because we're probably going to see a higher high, a higher low, and then a higher high at some point. Rate of change has flattened out and is turning up. So that's a lagging indicator, but looking for that to turn. Now, the other thing is, if you're a 401k type of person, let's stick to this, because we're seeing growth pull back and value holding fairly well. So if I'm in 401k, I'm sort of steering near more value oriented funds, okay, versus growth oriented funds. TRBCX is a growth oriented fund. There's value related funds that I would probably be more interested in if I was talking 401k. Additionally, whenever the number of stocks above the 50-day reach the red zone, I'm immediately starting to look at my 401k positions. Maybe I want to reduce my risk. which is what we've been saying for the previous 2 weeks before the year end. Take some risk off, reduce your risk, take some profits. So that's what I'd be doing. Now, do you think this is going to get all the way back down to the green zone? I don't. I think it's probably going to do something like, well, let me go out to a longer time frame. Maybe what we do is, similar to something like here back in December 2022, we hit the red zone, we came back down and we bounced again. I don't think we're going to come all the way back down to the green zone. It's just my assumption. I have no magic 8-ball that tells me what to do or a crystal ball, as you know. So short term, I'd be reducing my risk. Okay. Risk off below 4,700. Risk off below 4,700. So right now we're below 4,700 and we can see these 2 wicks here the past 2 days. Not making me feel warm and fuzzy. So looks like we're going to lose this area. That's left to be seen. Am I going to sell everything? No, because this could be just a shakeout. Okay. After a 16.5% gain, we're giving back 2%. Okay. So that's 401k. If I was like short-term swings, I'd be waiting for the markets to give me 2, not 1, but 2 bullish days. All right. 1 day to tell me that, all right, shorts are covering and buyers are there. Let's take a look at Airbnb, for example. Airbnb. All right, let's look at Airbnb. All right, so you had the pullback. So imagine this is the S&P 500 and we're below 4,700. S&P pulls back. We get a bounce. We get a doji spinning top. The next day, we get a bullish day. I'm waiting for the next day, which is, in this case, today on Airbnb. This is a confirmation day. Now, is this a guarantee? No, but there's a pretty good likelihood this is going to follow through. Look at RSI, MACD, and stochastic. This is set up. This is set up. Like we're waiting on S&P to set up. All right, we're waiting for S&P to set up as well. Okay, it's there. S&P is there, like it is over here. Was over here in October. Will we turn? The only problem is, remember, the number of stocks above the 50-day, that's number of stocks above the 200-day are at extremes. So who's left to buy? Okay, let's say 20 to 30% of people who are long start to sell, and institutions don't do anything. Institutions just stand pat. Okay, so then if we see the number of stocks above the 50-day back off a little bit, that would give us an opportunity to buy the dip and look for a higher low. Okay, so those are the kind of things I'm looking for because stochastics is now oversold. In the meantime, if you're a short-term trader, days and weeks, you can be selling calls overhead like I showed you with Apple. Okay. So you're making money even though the market's pulling back. Now, I was thinking about this morning. Why don't I just take puts? I think the answer should be pretty obvious if you're looking at the screen. Why I wouldn't take just straight puts on Apple. Number one, the implied volatility is high, so I'm paying extra. And if this doesn't move much, if I don't get below 180, for example, in the next couple of days, my puts are starting to lose value. That's why put credit spreads actually work pretty well. In this case, I have call credit spreads. I sold the 195, bought the 200. While I'm waiting for the markets to do something, I can be doing this. So if you have a 401k, maybe you have a trading account too. You take, a little bit of profits off in your 401k as discussed. And maybe in your trading account, you're selling premium overhead. That way you're always making money. I'm here to tell you that if you do credit spreads, and if you're a virgin to trading credit spreads or iron condors, please do the research first. There's no hurry. But I can give you 15 years of experience that it's a consistent way to make money and very conservative. I won't say very conservative. It's conservative because the likelihood of something jumping 20 points when it has an ATR of $1 or even worse, 50 cents, the likelihood that that 50-cent ATR stock is going to jump 20 points is like 99% against, maybe 10% that you might get some kind of trade like that. So I'm always looking at what's my probability. My 13-year-old gets this. It's just intuitive as a kid. If I told you you had an 85% probability of winning and a 15% chance of losing, you'd probably take those odds, right? That's like Vegas odds. So that's what I'm doing whenever I do a credit spread or an iron condor. And if you look in the new channel I just produced, these are trades I've been taking while I might be buying shares, talking about buying shares or doing some call verticals. These are credit spreads that I normally do. So while I'm waiting for my trades that I might take that are a little bit more risky, I'm doing these conservative trades that are constantly collecting income. So I want to be at the stage I'm at, which is, you make $1,000, $1,500 a day in credits over time, or even $500 a day. That's $10,000 a month. No. So look at credit spreads. There's a guy on YouTube named Henry, used to work at Goldman Sachs. The only reason I point him out, I don't know a whole lot about him other than what he said. But I can tell you as a new trader to options or investing in options using credit spreads or iron condors, he does a very good job of explaining it. Very simple explanations and make a whole lot of sense. The Apple trade, for example, I try to get a trade that can make me like $125, $200 in credit per contract with maybe $400 put aside in cash. So the way my account is set up, I don't use margin. I just use the cash that I have left over. And if it's like an Apple trade, I look to take an Apple trade that can give me $200 in credit per option. So if I take 5, it's $1,000 in credit. And I'm looking for maybe twice that amount in money that needs to be held. So if I make $200, I'm looking for credit, or I'm looking for cash to be held to be about $400 to $500. So I can get about a 50% return on my money during the duration of the trade. In most cases, I'm using 30 days or less. So if you can make 50% return on your money in 30 days, it seems like a no-brainer to me. At least it did when I first started learning about this back in the 2000s. After, the dot-com, I started looking at, all right, the market's pulling back, but what do I do? So just something to consider. I'm not saying go out there. It's much more risky to just buy calls directional or buy puts directional than it is to sell credit spreads, because you have a defined risk. I mean, you can lose the entire premium that you sell or that you buy. You buy a call, you could lose the entire premium if you like some traders who keep thinking that it's going to come back and you'll make your money back. All right. If I'm going on too much, just let me know. Okay. I think it's very valuable. The thing is, if you look at the CME stats, I believe Grover posted a couple of years ago, the CME stats, something like 76% of the time, options expire worthless. Okay. Oh, the CME, or the SIBO. Maybe it's the SIBO. I don't know. Probably the SIBO. Why not sell premium at an 80% probability of winning? Most people stay away from credit spreads because they don't understand them, and they think, they look at the amount of money that needs to be put aside as their risk. But if you don't look at calls the same way, you're missing a big picture, because if you put a $2 on a call and you have a 50 delta, then you have a 50% probability of the trade working if you have everything, stacked up in your favor. all the stocks in the sector are working, the sector is working, the index is working, etc. And if you have catalysts and high relative volume. But if you're taking calls or puts and you don't have that directional conviction or confirmation, then you're just throwing money out there for somebody like me to collect. Think of it that way. Whenever you take a call and a put, I do take calls and puts. Don't get me wrong, but just make sure that it's a delta that gives you a higher probability of winning. I'm always thinking, what's the opposite side of the trade? I'm long, but there's always somebody on the other side. Usually, always somebody on the other side that is short. Maybe they're wrong. Maybe I'm wrong. But I dispense with that when I sell premium because I'm playing the probabilities, and that's 76% of options expiring worthless. If I do it, I found that anywhere from 30 to 45 days is the sweet spot for me. And a 15 to 18 delta, selling a 15 or 18 delta put or call is the way to go because I can collect an average 150. Sometimes it's less than $100 if it's very short duration. But I try to get like somewhere to $200 to $300, and the cash aside is usually about $500 to $600. So I got about a 50% return on my equity. Please do yourself a favor. Watch some videos on just look at credit spreads. Now that said, credit spreads do sometimes work against you. Like we've had a couple of times. Now that's usually when you have implied volatility that's like 100% or greater. Like Tesla sometimes can chop you up. I've had a couple of Tesla trades in the last couple of months of last year that didn't do what I thought it was going to do. Now, if you look at this, what are you thinking? You thinking I want to buy calls down here? Are you thinking, what are you thinking? I mean, I look at the 265 and say, that's a pretty good probability we're not getting the 265. Do I want to put on a call credit spread now with this at the low? Or do I want to do a bullish put spread with a put underneath 230, buying 225, thinking that this is going to bounce? You can already see the doji. So I would be at this point, I'd be thinking put credit spread. Over here, once we had this big red candle, that's where I'd be thinking call credit spread for a week. So I'd be looking for an expiration the following week. And I'd sell a call credit spread on a big red day like that. So I'm always looking at, and if you have a question on what do you think I should do here, I'll look at it and I say, well, this is what I should do, what I would be looking to do. So in the case of Tesla, Tesla's had a lot of bad news. Are they going to get more bad news? Who the hell knows? Maybe. But let me do Tesla a little different here. I'm not going to do that. Sorry. I was thinking about trying to explain a little bit differently, but it's probably just going to make it more confusing. If we hit the high, I'm thinking of call credit spreads. If we hit the low, I'm thinking put credit spreads. That's fine. Now I need to see price action confirmed. So if Tesla were to bounce next week, I'd probably put on a credit spread with the 50 and the 200-day as my protection. Maybe I sell the 230 and buy the 225. That way I know I have the 50 and the 200-day as support. I have this pivot over here. I have all this price action, which is supportive. And look for this to bounce. So I put on a put credit spread, probably 230, 225. Looking for a couple of $100 in credit per contract with about $400, $500 that the broker is going to hold as cash reserve in case I fall asleep. Let's say Tesla doesn't bounce. Let's say Tesla moves through 235, loses 230, and I have a put credit spread. Well, I could either close the trade, which is probably what I would do, for a smaller credit, because remember, I get a credit of $200. If it starts to lose the 50-day and starts to move towards 230, towards the strike that I sold, instead of having a $200 credit, I probably have like a $100 debit to close the trade, which means I still have that $100 credit. All right, so I'll be managing the position, just not that aggressively if I have like a 17, 18 delta. So I have that 80% probability I don't have to manage it aggressively. All right, so I've spent way too much time on this. So hopefully that helps some people. I know you probably get bored of me talking to this kind of stuff sometimes, but it helps to explain what my thinking is and how over the last 15 years you consistently can make income. You know, you start off with maybe a couple $100 a week, right? You do options and you close them by the end of the week, and you make a couple $100 a week, and you learn slowly, right? Example, let me show you my son's account. He's got a small account. Okay, his total account is at 1283. Now we were closer to 1500. So what does this show you? It shows you, number one, that we're not always going to make money. Sometimes we're going to give a little bit back. He started with $1,000 on November 30th, and we've given some back, unfortunately. But I have a couple of trades here that are going to make money. Amazon, we took a iron condor. Okay. Let's see. The iron condor is the same one I have. And we want prices to stay between 135 and 160. Okay, I think that's a pretty good probability. If it starts to move towards 135, I can take the put credit spread side off. I don't think I'm going to have to do that because it expires in February. So this is a easy, I won't say easy, but it's a more conservative way for him to grow his account. Now, our goal is to try to double his account by the end of January. So I'm waiting for these two trades to work. Amazon, Iron Condor, and DoorDash put credit spread. So you can start with a small account, and the Iron Condor only required that I put aside $400 for I think it was $85 credit, $88 credit. So he makes 88 bucks. If by the end of the week we can reassess the trade, maybe we add to it, I don't know. But I can just sit there and wait for the money to roll in while we're waiting for the markets to move. You can see Amazon's not going anywhere. Okay, here's Amazon. All right, Amazon just sitting here. Kind of like Apple, right? Pulled back, it's not going anywhere. So we got the 135 put. What do you think the probability is that Amazon gets down to 135? Well, if it loses the 50-day, I'll probably take the put side off and I'll just keep the call side on Amazon. I posted this in the premium selling spreads channel. Okay, Amazon, just scroll up till you find Amazon. You can see what we're doing. Okay, so we're below 4,700. And this is not good, folks. I hate to tell you, it's not good. But we do have a few levels. Let's just take a look at the levels. Okay, let's look at the levels below 47, 46.75, I think was the level. All right, so here is 4,700. We lost that level, 4,700. So the next level, major level is right there, 46.75. And then we've got 46.50. So we got two good levels here with lots of puts underneath and lots of calls. All depends on how intense the selling is today.
consumer happiness, while every single one of his peers is fairly dramatically negative. And so I think Netflix doesn't just have, the power of a large subscriber base, but it's got the power
Low ticker minus 800.
Those subscribers are getting happier with the service and unhappier or less happy with the competitors. And so I think Netflix is in a very, very good position here going into 2024.
Andy, your data, the charts you're putting up here today, they are ominous if you're competing with Netflix in just about anything, right? This shows a really horrible data stream on Netflix competitors. And here's more problems. Through the first 3 quarters, the last 3 quarters get you to mid-year. Netflix revenue was growing about 5%. Last quarter, 8%. Expected this coming quarter, 11%. And the other thing, more streaming hours for Netflix. Their streaming hours going up, which means if you're watching it more, you are less likely to cancel. And you're more likely to probably recommend someone else come. So the momentum in terms of streaming, and we always knew there was going to be winners and losers. AI, everyone involved in AI should be watching here with winners and losers, and Netflix is clearly the winner.
Yeah, absolutely right. And I think you hit on an important point there. It's winners and losers, but it's also the execution that Netflix has pulled off. They've pulled off reining in password sharing. They've pulled off a move into an ad-based model as one of their tiers. Two things that were extraordinarily risky, I think, from Wall Street's perspective, from the general kind of consensus perspective, was those were very risky moves that Netflix made, but they pulled them off. They pulled them off because they have by far the best value proposition for their customer. That shows through in Folio data. It's only improving. And so we think Netflix has more pricing power.
Low ticker minus 800.
The competitive pressures on it are dwindling by the day.
Yeah, Andy, there was a report out. Wall Street Journal has an article about how trying to monetize more of their games.
All right, so I'm just expecting that get some conversations and direct messages. I'm just looking at the markets as consolidating. Yeah, it's kind of ugly. It's below 4,700. But unless something changes, I'm not expecting that this is anything more than a consolidation. Okay, so we've gained this pretty clean looking chart, right? Look at all the buying volume. Okay, look at all the buying volume. So we got 3 to 4 days of selling volume. It's not like we're dropping like a rock. Can we get the 50-day? 50-day is this previous area right in here. You can see where this volume by price support level is over here on the left, the histogram I'm looking at. So yeah, if you start selling into this weakness, you may regret it. You may regret that you didn't take profits off into strength 2 weeks ago. Maybe you bought some stocks at the highs as the markets were showing a divergence. But if you're selling now, just know that there's a good possibility we could bounce. And all I'm thinking is that until I see something else, all I'm thinking is that we could be consolidating, most likely consolidating after a 16.5% gain from the October low. Giving back 2 to 3% is perfectly normal if you talk to anybody who's been trading for a long time. Oh, shoot. I'm into lunch and I'm not even paying attention to who I'm listening to. Okay, so waiting for CNBC to come back on. All right, let's take a look at IBM. Actually, let's take a look at the watch list. 4-day week, a 4-day week, and let's see what the status of the watch list for the week. Okay, so it gets the profit taking. Here's a good example of something where I would say call credit spread on this because it just looks like it's trending, but I'd be looking to sell call credit spreads up here, looking for it to drop back down to the 90 MA. I'd probably look at a week out next week, but I'm not going to play with this one because it's like the volume is starting to pick up and this could very well get more jiggy to the upside. Summary. And let's see the 1 week performance. Okay, Zim again is doing very well. Look at Zim. Holy smokes. Look into credit spreads, please. Please do yourself a favor. The areas where you can go wrong with credit spreads is going too big, and not giving yourself that delta advantage. The delta advantage is your Vegas odds. If you go to Vegas and you got a 90% probability of winning and the house has 10%, you're going to sit down at that blackjack table and you're going to like clean the house, so to speak. Right? Look at Zim. Oh, man. What a nice trade, Zim. Okay, so look at Zim. Look at Zim. Now I'm going to show you the vertical I did on Zim. Wow. That's pretty nice. That's up 20%. Okay, now I took a couple of trades on this one. And this is the most current. Let me show you what I'm looking at here. I'm going to post this in the new channel too. Okay, credit spread. If you pick up on anything, if you go to the new channel that I started at Corey's request, Corey is Golf Mania. You can thank him. I don't know why I didn't think about this before, but I should have just been posting trades in there so you can follow them. If you notice anything, if you notice one thing about the trades that are posted in the premium selling spreads channel, you'll notice the consistency. A conservative trade with a low delta, decent volatility, decent theta, and usually about 30 days out. That's a consistent trade, consistent strategy, taking it when there's a reason to take it. I took that credit spread with the puts when this started to take off. It bounced on all these moving averages, and I saw volume. That clearly tells me anybody that's bearish is probably going to lose. And so did Delta. Delta was calculated by the actual option Black-Scholes method, which told me, number one, what's the implied move? What are people pricing in by trading this option, by the veracity of what they're trading, the volume that they're trading, and the prices that they're trading, the spreads that they're trading. It spreads in terms of bid and ask. You know, how aggressive are they? You know, all of these things are calculated into Black-Scholes from what I understand. So if I have one thing that I can share with you, or many, hopefully, all the trades that I posted in the premium selling spreads channel is a consistent way to, it depends on how much you want to do with this. Maybe you want to do 10% of your account, and maybe 10% is $10,000. Maybe you want to do these credit spreads. Start small. Start small. Start with like a $500, I want to say margin, but you get the idea of margin. Cash held aside. The broker's going to hold $500 of your money, and you're going to take a trade, one credit spread, and you're going to make $200. And you're going to get used to doing this. You're going to do it over month over month over month. Don't worry about being quick about doing it. It took me 15 years to get to where I am now. In terms of doing credit spreads, I didn't start credit spreads until, 15 years ago. I was like, as an architect, I was trading on the side while I was working my architectural position, doing exactly what I'm telling you right now, because I didn't have to worry about my job. I didn't want to have to worry about losing my job by doing this too much. I would just take a credit spread when the conditions were set. I would know that I would make $200-300 a week, maybe extra. And over time, I would start to build, do 3 or 4 contracts in each credit spread. Maybe I'd get it up to, $200 or $300 a day, $500 a day, whatever. And just do it consistently over time. Now, it's not always going to work. I will tell you, there's plenty. Brother Bill will tell you this too. He does a lot of credit spreads and Condors. You have to manage the positions from time to time. But what is the key thing that determines how much you're going to, how often you're going to have to manage? The delta. That's absolutely correct. The delta. The delta is going to tell you exactly how much you can expect to manage that position. If you sell a delta that's a 60 delta, there's a really high probability that you're going to regret that decision. Now, if you sell a 10 delta, you probably don't have to worry at all. You won't collect as much money, but that's okay if you're just in the learning stage. That's probably my best suggestion. Take one trade, maybe a 10 delta. Maybe you only make $25-30 just to get used to how it works. And you like the broker is going to hold $100 of your account, of your cash. You're not going to do margin because you're using your money, not Schwab in my case. So I'll use $100 of my cash. I'll trade one option. I'll make $25-30 just to learn how credit spreads work. The maximum amount I can lose, the maximum, is $100. $100. I mean, if you're taking calls, you're taking that risk every single day. You buy a $2.50 call, $250 later. If it doesn't move immediately, you've lost 50%, maybe 40% of your premium in just a couple of days. If it doesn't move in your favor and just sits there like Apple or Amazon, which is exactly what I want these stocks to do. I want Amazon to just sit here and do nothing. Meanwhile, I'm making money, which is the exact opposite of what most traders want. They want to make money immediately. Well, I would suggest credit spreads or Condors or butterflies. I wouldn't do butterflies. I'd do Condors or credit spreads. Condors nothing more than 2 credit spreads because you don't know which way it's going to go. And you're thinking neutral. In the case of Amazon, I'm thinking neutral. Could turn into bearish, but I wouldn't be worried about it. So take a small position. You're going to see that when you put your position together, you're going to look there and you're going to see what it says, maximum loss. Maximum loss is actually the money that you're going to set aside. And a credit spread, you have a guaranteed loss that the opposite side that you buy is going to protect you. You have that insurance. You're going to have that maximum amount that you're going to lose if it goes to shit in one day, or excuse the French, or you fall asleep or something happens and you can't watch the position. The maximum you're going to lose is $100, but you're going to make $25. So you just made 25% on your money. Think about that for a second. It's only $25 that you're going to make for $100 in max risk, that's a 25% gain on your 25% return on your investment, your cash. And if you can do that in 1 week, do the math, you know. So you can make 100% in a month doing that. 5,200% in a year. Now, obviously, not every trade is going to work, and sometimes, you know, even if you made half of that, if you made 2,000%, if you kept doing this consistently, you see how the math works? I mean, I don't know. I sound like a salesman, right? Sorry. I just see people throwing money away with that. With the only reason why this came up, I'll be very honest with you. When I say that, it sounds like, oh, you're not honest most of the time. No, but honestly, I had this conversation with my son. Exact conversation I'm having. You know, we're going to take $100 in risk. You're going to make 50 bucks. You're going to get a 50% return on your money. Okay. He gets it immediately. I say, you know, you got a 85% probability that we are going to have to manage this position. I'm going to show you, Antoine, my son, what am I going to do, and how often do we need to do it, given the delta that we're taking. 80 delta, you can rest assured you're going to be looking at this thing every 5 minutes or every hour. 5 delta, 10 delta, maybe not. So he gets that idea. So he says to me yesterday, you know, Papa, what do I need to do to take my $1,000 account that's now $1,250 since November 30th? What do I need to do to make $10,000 by the end of the year? This is the point I'm getting at. He doesn't understand the risk that he's taken if he were to do something like that. I said, dude, we are going to do conservative trades, and we're going to take 4 or 5 conservative trades. And once we see these trades work out and we add to our account, my first goal with him is to double his account, $2,000. Hopefully it's by the end of January. I think it's doable. Unfortunately, we had this week and a couple of positions worked against us. I had to sell Tesla for less credit than what we originally anticipated, and there was one other trade, I think NVIDIA, and we lost about 200 bucks of what we gained since November 30th on that XBI trade, which worked out really well. His first trade was XBI. Okay, we took it on November 30th. I showed you this trade countless times. You see that 74.50? When it broke above 74.50, that's where we got long. That was November 30th. And we took a credit spread on XBI. The credit was for $65, I believe, not a lot. And the cash secured on the side, kept on the account on the side, was, I believe, $125. So $65 trade credit for $125 cash kept on the side for the broker. So he basically had a 50% return on his money. We took it off on this last leg up towards no, actually, I think it was a little earlier than that. I think it was before this big red candle. Pretty sure that's where it was, right around 85, 86. So he made 50% on his income, on his $125 held. He made 50%. Not only did he get the $65 in credit, but he also got the theta that evaporated into the end of this option. So that's where I was coming from when I said what I said previously. You know, don't take too much risk on. Just try it out. Try it out. See if it works for you. I'm pretty sure it will. Okay. Anyway, I keep saying that's enough, but all right. So Zim integrated. So Zim integrated. Let me show you Zim. Okay, I posted it in the trading room and in the new channel. Here's Zim. Okay, here's the Zim trade. Okay, over on the left, you can see the spread. You can see the actual options that I took. I sold the 1250, and I bought the 10 put. Now, this was the second trade, and it was when it pulled back, when it started to move higher yesterday. I sold right near the money, so the delta was a bit higher. Delta was about 30 on this one. So there's a 70% probability the trade would work. 30% probability I would have to aggressively had to manage this position. So normally I would take like an 18 delta. I took a 30 delta only because I felt like this was going to take off to the upside as a second trade. And you can see the options that I sold. I sold the 1250. That's a short. That's why it's red. It's short. And I bought the 10, and that was the long put, so that I was protected. Let's see. You can see the open interest was decent. That's the other thing. You should have a decent amount of open interest so you know you can get out of the trade. If it's zero open interest and you take a credit spread, not only are you going to have a spread between bid and ask, but you're also going to have no one to sell to. Okay, so you need to have open interest. That's the other thing. All right, 1250, 10. Okay, so you can see what I sold. That's the short. The red one is the short. Okay, now let's see. That is the February. So that's February. Now let's look at this thing. Look how this thing is just taken off to the upside. Sorry, my brain's getting sidetracked here. All right, so here is Zim. Presently, Zim integrate. Oh my God, look at this thing go. Look at Zim integrated. All right, now can you see why I'd be interested in selling a credit spread? Now I'm also interested in long verticals. I'm also interested in calls. I'm also interested in shares, which, we had shares, end of last week? When somebody mentioned it besides myself?
5 minutes time now at the top of the hour. We see the release of the weekly Baker Hughes rig count numbers. Total rigs saw a prior of
But you can see how quickly this is moving away from that credit spread 1250 that I sold. All right, so that's evaporating. So anybody who bought those puts thinking they were going to make money just gave the money to me, basically. And after a little bit of time of doing these smaller trades, you're going to get used to it, and you'll start saying to yourself, like I did 15 years ago, why didn't I see this earlier? Because, you don't have the experience. That's why we had started the channel in the first place, so that you could learn from my mistakes, from my experiences, just like the money flow we talk about every day. We want to take trades like this when the whole group is moving, remember? So not only is Zim moving higher, but we also have the other shippers moving in unison. So if the whole group is moving, you have a high probability of success. Costamare breaking out. DHT breaking out. Diana Shipping breaking out on volume. Eagle Shipping. All right, the majority are moving higher. Genko Shipping and Trading higher on volume. Golden Ocean breaking higher. You get the point. Everything is moving higher. Let's look at one of my other favorites is Starbulk moving higher. TNK moving higher. Okay, so you can see that all of these stocks are moving in the same direction. Okay, so that's why I'm here. So if you stay here long enough, I'm sure you're going to pick up quite a few positive traits, and you're going to get rid of some of the negative traits that you may embed as a new trader when you're first starting out. So my goal in starting the channel or the broadcast and the service was that I want to help you not make so many mistakes, maybe make some good decisions, and like this, learn credit spreads. Okay, Zim's doing really well. Okay, so Zim is now up 30%. Okay. Yeah, good. Nice. Nice, Grover. What happened to are these guys talking or what? All right, so we're starting to turn the corner. Maybe they're just shaking people out. I don't know.
Well, we're going to assess the week that was today on Closing Bell with Courtney Garcia and Tom Lee. Find out what he thinks happens next week. Got a lot on the plate with CPI, earnings begin. So we're going to watch that closely. I hope you join me 3 o'clock Eastern time. Big interview, by the way, on Monday as well. Kathy Wood of ARK Invest is going to be with us, the CEO, CIO, after I report. That's 12:30 Eastern time. So a couple things to look forward to there. Let's do final trades. Stephen Weiss.
GXO. So this isn't a hedge intentionally, but it is a hedge. If I'm wrong on the consumer, GXO is the #1 independent 3PL, phenomenal, automated, all the big brands. Apple, 19% return.
Farmer Jim.
CVS clearly breaking out. It's a favor not only of mine, but of Jason's and Sarah's.
Okay, Jason.
So I like Marriott here. Consumer discretionary earnings will be very solid this year, and I like Marriott.
All right, Jenny, what you got?
My other contrarian play is going to be AppKey from our growth portfolio. Don't bet against EVs. 14 times earnings, 25% earnings growth ahead.
All right. So S&P is barely positive. Dow's negative. We'll see what transpires.
The other thing about credit spreads, when you think about it, all right, you don't have to be in the markets a long time to make some good returns. So you might. Okay, you don't have to be in the markets, with exposure a lot. I mean, you could take a trade on one of these and you get your 50% return in a week or 2 weeks. And maybe that's okay for you, Okay, some other stocks that I'm thinking about, credit spreads. Now, remember, these are conservative trades where I'm thinking the stock's going to move up or move down. I'll take the appropriate setup. If I think it's going to move up, I'll take put credit spreads. I'll sell below 17, 18 delta. If I think it's going to pull back like Apple, I'll sell the overhead call spread. Okay, Apple's still showing weakness. So the fact it's pulling back is actually benefiting my position. RSI is getting near oversold and stochastics is down there. So this could turn pretty soon, maybe next week. But there's very low likelihood this is going to get to 195 anytime soon.
Low ticker minus 800.
All right, markets continue to move lower. So I guess, the bottom line is even though the markets are pulling back, I'm making money. That's pretty much it in a nutshell. Whereas most people look at the markets through one lens only. It's either going up or it's going down. And I'm losing money if it's moving lower, and I'm making money if it's moving higher. That's why you get these emotions that hit you if the markets are down a few days in a row. Oh, shoot, the whole week's gone by and I haven't made any money. Dispense with that. Do some credit spreads. At least learn credit spreads, if nothing else. The other thing is, as the markets go through its process of ebbs and flows, you'll get used to, selling some put credit spreads at, as the markets start to take off. As the markets start to peak, you take more profits off of your put credit spreads. And as the markets move higher, you're starting to see the wave down begin. So you're selling call credit spreads. So you're always making money no matter whether the market's moving up or down. It's just like the majority of positions that you're going to have open are going to fit the current wave. Okay. So on a wave up that turns lower, you're selling call credit spreads. You're making money on the pullback. Same thing with Apple. Okay. So put credit spreads, you keep buying selling put credit spreads as it continues to push to new levels. You're taking a support level, you're selling below that level, like this little pullback to 187.45. The next day it breaks out, you sell a put credit spread right below that. When it gets to the highs and can't make a new high, you're selling call credit spreads up there. So you're always riding the wave. AMD is a new one. And we'd like to see this follow through into next week. Now, this is not a guarantee this is going to work, but I did sell a credit spread this morning. Now, let's say, okay, here's a good example. All right, so I started the put credit spread. It's in the top of the new channel. So just look at the top of the new channel. And you'll see the AMD credit spread. Now, it was based on something that Three Peaks Trading, Jason over at Three Peaks, sent out. There was, let me just talk about that. Okay, so the trade that Jason over at Three Peaks talked about this morning is he saw early this morning AMD with 2100 January 12th. That's next week. 138 calls. They were buying them for $2.80. Okay, so if he says they were buying them, that tells me they were either at the ask or above the ask. Okay, so the significance there is somebody buys a call that's above the ask, they're aggressive. They're buying. Okay. If they buy above the ask, that's more aggressive. They're willing to pay above the asking price to get into that option. So that signifies buying. So regardless, AMD had 2,100 of the January 12th, 138 calls being bought for $2.80. So that was the impetus for me to take an AMD credit spread because, I like to take a credit spread first if the implied volatility is high enough. Implied vol was at 37%. So that was pretty decent. Implied vol was 37%. So that's one check mark. I want to see that. Now, I sold a 26 delta only because normally I take under 20 on the delta. It's a 26 delta. The reason why is because it had already started to move, and I think there was a pretty good probability that I was not going to see this 134 strike is what I sold. So it's down here near yesterday's low. Okay. Now, what I was going to say, considering Jason's post, 2,100 of those calls, considering CES next week, I think there's a high probability that some of these stocks. Now, if you go back and look at previous CES dates and look how stocks responded, we're probably going to see something similar. So let's say it doesn't work. So then what do I do, Vinny? Okay, so let's say you put the AMD trade on and it doesn't work and we start to move lower. Well, I might decide to go ahead and sell a call credit spread up here north of 150. Then I have something of an iron condor. And if this continues to move lower, then I take the put side off and let the call side run. Does that make sense? So I'm riding the wave. I don't know which way this is going to go, but there's a pretty good probability it moves higher. So for now, I have a put credit spread. Never a guarantee, but I'm playing the probabilities. So if it goes against us, all we're going to do is sell a call credit spread up there at 151 maybe, or 152, and buy something, say the 154 or something like that, something overhead. So we'll get a premium for that. It'll partially erase what we're experiencing if it does move lower. If it does continue to move lower, then we've got an iron condor, and we can decide whether or not we just want to take that put side off entirely and just keep the call side on. So you can always see how, you manage the position, but it's not like a very high stressful situation where you bought calls at 151 and on Tuesday to start the week, it gapped down. Now you're immediately 50% down on your calls. Okay. You can see how you got to be really impeccable with your timing and entries. Now, we take calls. I take calls all the time. I take puts, I just know that if I take, a ratio, let's say I take, like I was telling my son before, if I take, 4 credit spreads and I take one directional call or put, then I've got a 20% 20% risk versus what I think is conservative, which is the other 4 trades, which are credit spreads. Does that make sense? So I'm always thinking about, okay, if I've got 10 trades on, how many of them are high risk that they could pull back? Like the example, 50% here, if it dropped from 151 and I bought the absolute high, which I never do. How many of those do I have? Do I only have 2? Do I have 10? If I have 10 of those directional calls, my risk is through the roof. If I have 2 directional trades and 8 credit spreads, remember the credit spreads are 80% probability of not having to manage them aggressively. So I have 8, which are high probability, 2 that is more risky. I'm pretty comfortable with that. But what I'm not going to do is just constantly churn my account, buy a call, hope for the best, have the best setup. I saw something from Jason, whatever, or from Option Hawk or somebody else. And I feel pretty confident. I have a lot of conviction. The only way I would do directional calls without a vertical component, a debit, is if I had high conviction and I would monitor that trade. If it worked in one day, I got a good one. Maybe I make 50% in one day, then I'm out, but always balancing your risk reward. Okay. Whether it's the number of positions you have open, how many of them are high risk, and S&P continues to move lower. And as you can tell, I'm not stressed out here as the markets pull back. I hate to say it, but it's actually working in my favor in most of these cases. Apple.
be a couple more months time to see. Thank you both so much today. We appreciate it. Thank you, Diane Swank, and of course our own Steve Leisman. The Dow is back near session lows, erasing a 130.83 point gain. Let's get more from Dom Chu. Dom, how's it looking?
So it looks just about like the way it did maybe in the pre-market trade ahead of the open.
All right, Disney's still not doing anything.
So we saw it was implied to be about 180 point downside in the market then. We got the 180 point upside, later on this morning. So we're just about flat on the session right now. So if you want to call this kind of like a Goldilocks scenario, I guess you could say on that.
Okay, the beauty of a credit spread. Let's see, which one is this? This is IWM. Okay, Netflix. The beauty of a Netflix position. You see where Netflix was to start the day when I took this screen cap? It's at 473 right now. So you see over there on the left, today's options. Now I sold these options. They were about $200 for the put that I sold. They're now what, 3-4 cents? Those puts. So the beauty of a position, if you held it all the way into expiration, is like this: the position is going to expire worthless. A lot of times, I'll close it before expiration day, like on a Wednesday or Thursday if they expire on Friday, just to take some risk off. And what it does is it removes the cash that I have put aside. The broker takes and puts aside. So in the case of Netflix, I think it was something like $800 put aside. So that 800 goes away now. It's back in my account, and I can use that for lack of a better term, for margin. So that $800 now available to me. It's no longer held on the side. So I could just close this trade right now. It's up 97%. You know what? I'm going to go ahead and do that. I should just hold it. Actually, it says to close, it's going to be $2. $5. Okay, so this is good. All right, so okay.
As we break through, if you get into an economic situation like we were discussing, but not a big recession, we think it kind of happened already.
I think it happened already.
Yeah,
It's kind of series of as we talked with other, or if we've got rolling recessions or mini recessions, look at the ISM manufacturing, 15 months negative, that kind of thing.
Right, or our rocky landing idea that we were going through an asynchronous recession for the last 18 months, chips, housing, commercial real estate, the regional banks, et cetera. And I think we were going to look back and say, gee, the recession already happened. So once you get to that point, then all these stocks, these higher risk stocks, smaller cap stocks, value stocks, cyclical stocks, emerging market stocks that have been held back because the recession is about to happen. The date of it keeps getting pushed away.
Right, and you were optimistic all of this year, and the market and the facts have come around to that point of view. So you think it's kind of, we can keep going, even where we are. And you have some names here: New Fortress Energy, small cap, PNC, the regional bank, Argenix and Biotech, Tencent in China. You're not afraid of emerging markets here either.
No, those are the most oversold stocks in the market. And, with the dollar starting to soften up, interest rates coming off, and expectations being so low. I mean, everyone's calling China uninvestable.
Hong Kong, didn't they just have 4 down years in a row in that market?
Yeah, and that's usually a bell ring when something's uninvestable. It's in a couple of
Okay.
Facebook of China is
trading at a single-digit multiple. It's down 60% off its highs. All you need is just a whiff of good news, and those stocks are poised.
It's fun to actually hold a position into expiration and see something that you sold for 150, 200, whatever, $300 in credit. The option at $300 is now worth 5 cents. Something exciting about that. It's not too exciting if you're on the other side of that trade.
And one interesting thing, given the discussion you're just having about is the data pointing to the Fed, giving Fed urgency to cut or not. You're more in the camp that thinks we aren't going to get as many cuts, you know. And I'm sure you looked at the jobs report this morning and thought, yeah, this is what I'm talking about.
It's not going to happen.
Sure?
Yeah. Well, I have to invest money, so I have to have a basic income. Right. Be wrong. But, we really try to understand that based on the economy. Right now, people embarrassed themselves 2 years ago, but it took too long to happen. And he's sitting there.
All right. So the odds are with us. If you're the seller, you're the odds. The odds are with you. Okay. Okay. All right. So S&P continues to move lower. We're only off 0.1%. We've given back, all of today's gains, but we're only off 0.1%. So it's not that bad, really, when you think about it. Now, don't misunderstand what I'm talking about. While the odds are heavily skewed against the call or put buyer, directional call traders, you can put more in your favor by making sure your deltas are much higher. So I like to trade in the money. The more you're in the money, the more it trades like actual shares. Okay. So if I have a 60 or 70 delta call option, I have a very high probability of, as long as I'm buying at the right time and my entries are good and all the things I've discussed today are set up in my favor, then I have a very high probability of winning. So don't misunderstand. I do take calls. Many of you, I see Buford, killing it. Steven, many of you, Frano, a lot of you will trade options. I'm just saying, look at the opposite side. I mean, always look at the opposite side. See if there's something there for you that can add to your P&L. That's all. So I see some of you doing some really great options trading. I mean, Frano will take a S&P 500 option at $2 and sell it for 20. I mean, that's going to kill my returns on credit spreads. But over time, I'm going to make consistent winning. All depends on how you want to do it, how you want to take money out of the markets. That's all. So I will take directional spreads. All right. So, David, just check out Invest with Henry. He's got a good YouTube channel. Yeah, a lot of people are that way. A lot of people, it takes many, many times to get the idea. It takes many times to get the idea. Like, I was really slow with learning algebra. I hated algebra. I just couldn't get the concept. What do you mean X and Y equals Z? And I substitute X for 10 and Y is, and I was like, what? I just like, I was very combative. That was high school, very, I don't know, very argumentative. Instead of just saying, okay, I get it. I see what the concept is, variables and different things. I mean, at addition, subtraction, division, all that stuff, I get that pretty easily. But there were certain concepts, calculus, I hated calculus. And that's something that you need as an architect, to figure out irregular areas of, property and stuff like that. I just hated it. It was just the teachers, I guess. But a lot of times, options trading, when you realize how easy or how straightforward it is, then it finally clicks and you're like, wow, I should have been doing this a long time ago. See, that's the thing. I tell my son all the time, if I knew what he's learning now at 13, if I knew it at 13, oh man, I don't know. I'd probably be dead because I would have bought some stupid, sports car and done a James Dean or something, because money does corrupt you in a way, if you're not mature enough to be able to deal with it. So, but the fact, just the education or the knowledge that a 13-year-old is going to garner from his father teaching him, it's it's invaluable. I keep thinking that by the time he's my age, that the market's going to change completely. AI will be doing everything. Everybody will have an AI trading for them, doing whatever. I'm thinking that eventually options will turn into something else. Maybe not. Maybe options will always be there because there's always going to be the people who learn about something that people like. I hate to say it, people like me are going to benefit from because you can come into the markets, which was what I was telling my son. You don't just go out because you have an idea. Okay, that his idea was that airlines. He wants to invest in airlines. He wants to buy calls. Now, actually, not a bad call. Okay, we've got the pullback. Here's American Airlines. Got the pullback, and it looks like we're going to bounce. RSI back to 50. Stochastics primo setup. So maybe he's got something here. But what he wants to do is take his account and buy all calls. And I said, no, you're not going to do that. We're not going to do that. We'll take 4 conservative trades, selling credit spreads, and we'll take 1 risky trade. If the 1 risky trade doesn't work in 1 day, 2 days, then we're out. We're out. Okay. We'll take a small loss. We'll take a 15%, 10% loss on options. But we could do that. So he's looking at airlines. So I said, we're not just going to take it because you have an idea. Let's take a look at the chart. And if the chart agrees, the key is that the chart and price action agree. All right, so this is American. Let's look at some other airlines. Are they all doing the same thing? They are. Look at that. So this little son of mine, number 1 son, actually, he's on to something here. Okay, he's on to something. That's cool. All right. Hawaiian Air. Hawaiian Air is being bought by Alaska, right? Alaska Air. Alaska. Okay, even Alaska, who's going to buy Hawaiian Airlines, and I think the Fed is sort of in agreement. There's another trade though that they're not in agreement with. They don't want who I forget who is going to buy JetBlue, but there's going to be some merger. Like I think it's Spirit Airlines and JetBlue. Is that what it's going to be? I mean, all of these are looking pretty good. All these looking pretty good. LUV, Southwest. Okay, they're all doing the same thing. So there you go. You got your first check. Your first check. Now, we'd like to see the transport sector, IYT, moving higher. All right, it's holding. It could be better. It could be above the 21-day and bouncing. Volume could pick up. So you've got multiple stocks in the group bouncing. You've got a key level holding. So what would I do? You know what I would do. First thing I would do is look at the potential for a credit spread. But the problem is airlines don't have a high implied volatility usually. Let me just see here. UAL. Oh, yes, he was talking about American Airlines. American. What? Oh, for today. All right. So look at the change in direction on American Airlines. Something's going on. I don't see any news, but the implied volatility is 79% on AAL, American Airlines.
Where would you be watching for this to broaden out or escalate further? And if it's kind of watching markets.
All right. So normally I'd want to see high implied volatility. 45%. What do they have? They have. Do they have? They have to have earnings or something. Something's got to be driving this implied vol. Let's look at AAL. Okay. So they're okay. So they have earnings in a couple of weeks. Okay. 13. Okay. 1250 put by the 1050 maybe. Couple of weeks out. 1050. Yeah. It puts are worthless. All right, so airlines looks good on the long side. Okay, just looks good on the long side. So if you're thinking about shares, not a bad idea. He's going to be really proud of himself. You know, I have a tendency to say, immediately have an answer for him like, we're not going to do that until we check out the charts. Now, some of that is luck, I guess. But his intuition is people are traveling, so earnings should be good. I mean, the idea that a 13-year-old gets the concept of a company making earnings translates into stock price just blows me away. Of course, he's, osmosis. So I'm kind of like patting myself on the back, but he gets it, up and to the right. What are the moving averages doing? You can see the volume by price bands on the left. So I'm talking myself into a trade here, actually. So what I'd probably do is a call, a buy right or something like that. Buy shares, sell a covered call, 20 delta or something like that. Yeah, that looks pretty good. There's a long setup on all the airlines. What's Zim doing? Zim. Okay, a little profit taking at the highs on Zim. Yeah, so that pulled back a little bit. Mm. All right, so nice reversal, shorts covering. I hope that diatribe about credit spreads helps some. If it confuses you a little bit, sometimes it just takes, seeing it over and over and over. So posting those trades in the premium selling spreads channel, while that's somewhat helpful, could also be a little confusing. So make sure you're checking out the YouTube channels out there that have coverage on credit spreads. I never thought to record videos on same, so probably I should do some of those. That way you can pause and rewind as much as much as you need. Oh God, the things that CNBC likes to talk about. Jesus. Sorry. So Bank of America sees NVIDIA's free cash flow to $100 billion in 2024 and 2025. $100 billion in cash flow. Wow.
And I appreciate you mentioned that it's basically been somewhat sideways, but I actually don't think that you mind at this point when shares are up like 230% over the last 12 months. Like, hey, I wouldn't mind things just kind of hanging out at these levels. still pretty optimistic.
Our next guest talked a lot about that. Vertical phases and horizontal phases. It's in a horizontal phase, but that can lead to more vertical phase coming in.
And I think that's really the whole thing here. And that's what these analysts you heard from all week are like, yeah, we're getting into this name. We still have our buy range. But first, we will discuss another story that was objectively going to be largest in 2023. That was all things Tesla. So here to tell us more on the stock, I'd like to welcome in Kevin Green, senior markets correspondent for the network. Kevin, not our first time talking Tesla this week. It's a frequent flyer on the show. So walk us through what's driving through the price of 50 today.
Yeah, definitely. We are seeing actually another recall that's taking place. And this one's going to be in China, where they are going to be recalling 1.6 million vehicles because of an issue when it comes to the autopilot feature. But good thing to note here is that this is actually going to be an
All right.
update. So there actually does not need to be a need for their
High tick alert plus 800.
High tick alert. Oh, are they going to do it again? Oh my gosh. They're just like chopping people up today, huh? Oh, that's terrible. That's so bad. What they're doing to people.
in December where they actually recalled about 2 million cars and they were able to resolve that issue as well. So right now we are seeing some flat price action at this point in time today. A little bit of volatility to say the least, but a lot of these recalls, since it can be fixed over the air, really does not impact the stock that much. And it's one of the great benefits that you can see when it comes to these EV vehicles that don't take as much maintenance in order to correct the emissions.
Kev, is that even the right term to use? I know it's the one that's used, but isn't this more like a software patch? Hey, there's a bug in the software. There's a quick update. You download it, you put it in, and now the software is fixed until the next one. Recall sounds like I got to bring this thing in and like get new parts. That's going to cost me some money.
Yeah, I'm right there with you. I seem like it's like
Okay, got a high tick alert, so that's good.
situation of how this issue needs to be fixed because it is so easy to correct.
Yeah, that is a really good point. The last time we discussed something very similar, it was like really, really reminded to me that this was not a true recall, it was a software patch. I do admit it's different, but unfortunately the lingo that is actually used by the government is still recall. So I do think if it's not as perhaps maybe it's the headline to make it seem, so it's a good thing to remind yourself. Read beyond the headline, but appreciate the breakdown as always, Kevin Green, senior market correspondent for the network. Now, coming up next, it's time to talk with Coinbase and Marathon and digital volatility this week, as we've seen volatility also in Bitcoin all week long. We'll discuss how that's impacting these equity stocks coming up next.
Oh boy. You imagine that NVIDIA is going to see 100 billion in free cash flow? Do you know how massive that is? Ay, ay, ay. Free cash flow, $100 billion. Now, that's Bank of America giving its forecast for 2024, 2025, just based on sales trends and what companies are buying NVIDIA chips, etc. Ay, ay, ay. That's just incredible. 100 billion in free cash flow. Free cash flow. God, I can't wrap my head around that. 100 billion.
At each and every angle, the whole picture, everything comes full circle on trading.
The other thing, when we're talking credit spreads, most of the time, I like to do credit spreads. You know that I like to see open interest for one, but most of the time I like to do credit spreads and iron condors on highly liquid companies like Netflix, like Nvidia, Tesla. Now you have to balance that with How much implied volatility or how much movement am I able to stomach, so to speak? Because Tesla's shaking me out a couple of trades. Where I took a credit spread, I didn't get exact perfect entry, and I wound up having to close the trade for a smaller credit. Remember, you get a $200 credit, you buy it back, the trade doesn't work for you. You might end up with only a $100 credit, but you still have a credit. Difference being, if you buy a call and the trade doesn't work, you lose money. You don't get anything back. All you get is the original money that you had put into it, but you don't get a credit. You know what I mean? So that's something to consider as well. Trade highly liquid companies and just understand, look at previous price action. Are you able to stomach a move 10, 15, 20 points? Because Netflix can move sometimes. Netflix, Nvidia, some of these stocks, when they get going, like Tesla has a big day, you have a big move. There's a $10 day right there. There's a, what, 482 down to 460, almost a 20 point. There was a 20-point day right there to start the week. That actually is what shook me out of the recent Tesla trade. So are you okay to handle that? What do you need? What's up? My kitty cat came to visit me. Okay. I would say the other thing about credit spreads is if you're trying to manage like $300-400 a day, you're probably going to need about $10,000 in capital that your broker is going to hold on the side. So I've seen probably an average is about $10,000. That's cash in your account. That's used for the trade in case all of the trades blow up. If you got like 10 credit spreads on, you're going to average about $10,000 in cash needed to manage a $200-300, maybe $300 to $500 a day in profit. Okay, then you have to average. The days where you don't make a good day. So overall, during the week, $10,000 in cash on the side. I've seen cash held on the side. You can manage about $200 to $300 a day. Okay. If you enter the trades the way we talk about, high, low, higher implied volatility, low delta, getting your entries aligned, and if you just start with a small credit spread, and get used to it, maybe you only make $5 a day, $10 a day, but you get the concept. Whereas if you parlay it into 10 positions instead of one, and you start taking NVIDIA trades instead of, I don't know, American Airlines, you're going to start making money on a consistent basis. That's the whole idea of credit spreads, is that you're not taking a tremendous amount of risk. You see what your delta is, what your probabilities are, and you're taking consistent conservative trades. Where people fail on credit spreads is that they take too much risk, or they start to treat it like a casino, just throwing caution to the wind, so to speak. Can I help you? You're clawing me. You're putting your nails in my leg. Cat came to visit again. Airbnb looks like it wants to go. Okay, coming off a VWAP. Nice, nice. You're so cute. You are. Yes, you are. I haven't seen a cat sit up on their hind legs like that. That's weird. All right, let me take a few minute break. I'm your host, Cousin Vinny, coming to you from the closingprint.com. It's time to make some lunch. Give me about 10 minutes. I'm going to take a lunch break, and I will return.
I was born on the south side of Chicago. It has been a long road, but now I'm working for Schwab.
Okay, random thoughts. I don't know if you're still watching. Yeah, I do debit spreads.
Call us, Chris and me, at 4 o'clock in the morning. We're going to always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Okay, let me take a break.
Trading the trending names every day. It's fast market. Ready for you, ready to go. I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Missed out on today's market headlines? Get caught up and catch the wrap at schwabnetwork.com. Available anytime, anywhere, on any device for free.
Welcome back to Next in Investing. Time for under 30. Time to discuss on holding Jenny. And this market, I mean, it's real quick. It's all over the place. We were up, we were down, now we're up again. So don't look away. It's like must-see TV at this point for the stock.
I appreciate it though, because I think we end the show exactly where we started, which actually we're looking a little bit more positive than where we were about 51 minutes ago. But looking at On Holdings today, which of course is one of these very popular, relatively new names to the shoe and the athletic retail market. It's up about 54% over the last 12 months, so it's done quite well, but it's been weak really since August. So you're to tell us now more on what we can expect now for this new year. I've been welcoming George Pillis, senior markets correspondent for the network. So George, this name was named a top pick for 2024, and Needham replacing Chewy. I think that makes perfect sense, but walk us through his being here.
Well, I think this is an interesting company. I mean, you look around, they seem to be very popular. I see a lot of people wearing them. In fact, now my teens, my daughter at least, is wearing them along my wife. So this is a company that's gaining traction, and these brands from a footwear apparel standpoint can be very powerful, and that's something you have to keep in mind with this company. They essentially sell, for those who don't know, outdoor activity footwear and apparel and accessories popularity. It's growing. Now, there's also financials to back it. So first off, I'll talk about Needham's call. They have a $40 price target on the name, and they added to their conviction buy list for 2024. If you look at the sales for the company in the last year, it was higher by 60%. Their estimates for this year are higher by 50% compared to last year. But this is a company that's also very profitable as well, considering gross margins around 60% of sales. This is a company that's profitable not on an adjusted basis, but on a GAAP basis, and that's important because a lot of times you'll see one-off charges or one-time items taken based on adjusted earnings. That's not the case here for On Holdings. So I guess what I'm trying to say here is this is a growth company that's growing profitably, and their sales estimates going forward are 50% with earnings estimates at 63%. And if you do look at the forward multiple or earnings per share or PE ratio, forgive me, it's 30 times forward earnings. So it's basically trading at half of its one-year growth rate. So I can see why Needham has a $40 price target on this name, and I can also see, I don't necessarily see why, forgive me, why so many short sellers are on top of On Holdings from the standpoint of being bearish on it. There's about 10% short share float as a percent of the total float on this name, which is quite high considering the profitability of the business.
Yeah, George, kind of a newer comer to this space, but still relatively, kind of new to the public trading world as well. It's a Swiss company making footwear, but this is a space that's been so dominated by Nike for so long. Is it always going to be difficult to kind of come as that company that's been so entrenched? I know it's a ever growing, ever needing kind of a product, but every other company seemingly has failed at it.
Yeah, look, you make a good point. I mean, Nike obviously is a major competitor in athletic footwear across the board under multiple sports and things of that capacity. I mean, On seems to be more focused on running shoes and maybe casual shoes, so they're a little bit of a different animal altogether. But look at Deckers. We talked about, I think about on this program, or one of the other shows I talked about it. They actually produce Uggs and the Hoka brand, which is another athletic shoe that's also been popular. And Deckers really took off in the last year because of the popularity of that brand. So my point is yeah, there's a lot of competition. There's the incumbents like Nike, Adidas, if you will, which again have the majority market share. But you have to think about popularity of brands and trends. And that's really what you have to think about when you look at On Holdings. And I think that's important to keep in mind that irrespective of competition, brand trends can be very powerful. And lastly, just keep in mind also that the company is profitable. And that's extremely important, especially for a growth company. You don't necessarily see growth companies that are growing at 50+% revenue that have positive GAAP earnings.
Yeah, George, I'm actually fairly inspired to buy these shoes because I've never tried them or worn them. And that's like I've tried every other brand, so now after talking about this so much, I'm going to try for myself. So appreciate the insight on Holdings. Name it done quite well in the retail and the athletic space, considering it's very competitive. George Tillett, senior markets correspondent for the network. That also does it for Alex and myself for Next Gen Investing for this week and for this Friday. Have a wonderful weekend. Coming up next is the watch list with Nicole Petalini.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. They're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
I'm Nicole Petalini, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Binge watch the market with the Schwab Network.
Tune in 24 hours a day, 7 days a week on SwapNetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network. It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next trend investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffee. I'm Jenny Horn. Join us for Next Trend Investing.
1 p.m. Eastern, only on the Schwab Network.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on SwapNetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network. Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Good afternoon. Welcome to the Watch List. I'm Nicole Petalini. It's 2 p.m. Eastern Time. We're coming to you live from the New York Stock Exchange. Glad you are with us. It is the first down week after 9 weeks of gains, and it's been a busy kickoff to 2024. We'll have it all for you in today's show. Of course, we'll be taking a close look at the December jobs report, how it could affect the path moves forward. Also, a look at parts of the market in transition and things to watch, such as generative AI. And those weight loss drugs too. We'll examine why one guest called Merck, Deeper Technologies, and Thermo Fisher some picks for 2024. In the meantime, taking a look here at the markets, we've had some back and forth action throughout this day. The jobs picture has been an important one. We'll go through that. In the meantime, so there's been more jobs added, and so that is something we're watching. The March cut is less likely for the Fed. The S&P at 4701, 12 points. The Nasdaq at 51 points. That's 1/3 of 1% gain there. The Dow's at 1/10 of 1% at 37,477. And the Russell, those small caps, just fractionally higher. Consumer staples and real estate have turned into the red, but for the most part, we've had a lot of green throughout this day. Consumer discretionary, financial, communication services, technology have all been leading the way. The dollar 102, gold 20.55 a troy ounce at $5. Oil pulls up 6.4% at $73.90 per barrel, and Bitcoin 43,950, down 1.5%. For some of the big stories of the market, Kevin Hanks is with us, senior equity contributor here at Schwab Network. So we're looking at the December jobs report, full ISM services report. What stands out to you? What are you watching?
Well, Nicole, on a Jobs Friday, the number one data point of the month we get in unemployment and non-farm payrolls, I'm looking at the wages data. And the wages data re-accelerated to the upside. Up 0.4 was flat with last month. 4.1% was up at 10 in the year-over-year wage data. That's what I look at. If you look at the non-farm payroll number, you divide it into two numbers. It's the economy, it's jobs and unemployment, and then it's inflation. And the inflation part of the non-farm payroll number was way stronger than the Fed would like them to be. And basically, in my opinion, took a March rate cut off the board, Nicole. Now, then at 9 o'clock, we got the ISM services number, and that showed slightly lower.
All right, I'm back. All right, so market's just sitting here. Market's sitting here right at 4,700 support. This is pretty impressive, I have to say. Pretty impressive that this 4,700 level has, true to form, held, even though we've dipped below it and moved above it, we're holding right along this 4,700 level. So I'd expect to see a lot of this option gamma and delta moving one way or another, as the Pretenders song goes.
inflation. So whether it's 2 cuts or 3 cuts, isn't really the focal point for us. More so that the Fed is moving away from restrictive policy into more supportive, I think is a broader, more supportive blanket that the stock market will welcome, rather than worrying about 2 or 4 cuts. But we'll see.
All right. And then one thing that was pointed out to me was that the productivity and that the trading desk really liked this. They saw more productivity in the last jobs report and more output by folks. And so with that number going up, that is reminding folks more of the 1990s. Are you hearing anything more about that? The productivity number and output number sounds good, doesn't it?
It's hard to grasp, hard to calculate idea. I think generative AI would definitely in how much productivity increases. And we're just at the very beginning of starting to see that come through. So that's definitely a net positive for the economy. Adds to that resilient nature of being a more services-oriented economy rather than a manufacturing economy. So I think that helps has tipped the scales along with the Fed of putting more of the possibilities into kind of that soft landing camp. We don't think the recession risks are completely extinguished, but I think that combined.
We keep flirting with this 4,700 level, and yet, like a cork, sitting in the water watching a fish bite, we keep bobbing above 4,700.
That's really where you have to be aware of any recession risks during that short time.
What do you advise to folks? I say it's a little bit of a barbell approach. What do you think?
Yes, we think right now has played the hand that's not think too much about it. Soft landing has increased probabilities. It's not a guarantee, nothing is in this business, right? But we think that with small caps, it's a great barbell approach, taking away from some of that high beta, that high beta exposure that did so well last year, kind of rebounding into that. So soft landing is pervasive.
High temporary plus 800.
We have a supported valuation in small caps, specifically relative to large caps. So we think the valuation, multiple re-rating is very attractive in that soft landing camp. It's very fertile for small caps. So for us, the small caps is kind of that soft landing play, and then you barbell that with low volatility, healthcare, high quality growth on the large cap side. Because of that recession risk kind of speed bump of growth happens in Q1, as GDP kind of troughs out, that will give benefits in terms of sucking up some volatility. So barbelling large cap, high quality growth with low volatility, healthcare, overweight, combined with small caps, and kind of moving out of large cap energy, high beta cyclicals. We think that's a great trade for Q1 this year.
Yeah. And could you expand on the bond portfolio? I know you've been adding duration. Tell me a little bit about bonds and what you advise to those so we're very clear.
We'll be adding duration to our bond portfolio and a lot of the strategies that we manage here for our clients. And we'll have really the combination of that lower growth. We see GDP kind of bottoming out. Ameriprise has forecasted about 1.5% GDP growth for this year, but the low point of that is happening in Q1. So we think kind of lower growth, lower inflation kind of helps bonds perform better and be that traditional diversifier that we have leaned on when building out diversified portfolios. So you see the short end of the curve is still pegged up really high by the Fed. So we're kind of barbelling, investment grade bond duration going out 6 to 7 years, high quality investment grade bond duration, coupled with ultra short treasuries, still getting 5.25%. We think that's a great risk reward trade. Again, for as we look out to Q1.
Right, understood. Alexander Reed, thank you so much for visiting this as well. Good to see you. Thanks. Coming up next, some strategies to consider for your portfolio and what do you guys believe here that could be below average returns for equities? How can we navigate that? Stock network. We'll be right back.
Trading at Schwab is now powered by Ameritrade, unlocking the power of think or swim, the award-winning trading platforms. Bring your trades into focus on Think or Swim desktop with robust charting and analysis tools, including over 400 technical specs. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
All right, flirting with 4,700 support resistance. A lot going on here.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
There's no place like the New York Stock Exchange. We got you covered. The biggest stocks, the biggest trends, all the market moves. The watch list with me, Nicole Penalty, 2 p.m. Eastern on Schwab Network. Welcome back to the watch list. I'm Nicole Penalty, live on the floor of the New York Stock Exchange. A look at some more market movers for you right now. Constellation Brands trading higher after the company reported its earnings to raise the guidance for operating cash flow. The quarter included companies in yellow, but the outlook was the light of the best-selling leader in the United States. Constellation CEO did warn it is near-term headwinds in the wine market. The call to beer segment strong. Constellation shares are up more than 18% in the past year. Costco saw a flurry of
Rejected at VWAP.
price target increases after the wholesale retailer reported almost 10% increase in sales year-over-year.
Let's look at Costco. Costco with 26.15 billion in sales revenue. Nice bounce on Costco. What about Target? I'm very interested in Target too. You know that I want to start a position on Target. Starting to consolidate now. So probably in the next few weeks, we'll see a setup on Target. I don't want to buy it right here thinking it's going to bounce. I want to see how we consolidate after 6 weeks of gains. Certainly, Target showing completely different look than the previous 2 quarters, where they started talking about shrink and inventories and closing stores. The Dow Industrial Diamonds. I have a credit spread on it. I sold the 368. 368 is below the 21 day. Watching that closely. See the diamonds. What time is it? 2:20. 2:20.
When you look at bonds, we see value still in the U.S. because this is where the economic deceleration will become more visible. Inflation is falling. Yes, the Fed is not going to cut probably definitely much less than expected, but we see a clear downtrend in nominal growth, which is the ultimate driver of bond yields. So we like TIPS, we like government bonds, but we also like emerging market bonds because this is where the value is. Currencies are cheap, interest rates are being cut, and when you look at the differential in growth between emerging markets and developed markets, it's very, very high. So I think emerging market bonds is the place to be on the fixed income side for 2024.
We're also waiting. Today we got in the jobs report, more jobs than expected. The unemployment rate stays at 3.7%. ISM services, a week, 43.3. We had ISM manufacturing, which while a little better, was still in contraction territory. Next week we'll get also CPI. Those will be our inflation prints. What do you think? What are you looking for there, and how might the market react one way or the other?
I think inflation is in a downtrend, but it's fair to say that, especially for when you look at core goods inflation, probably we are in the bottom. So my concern here is that the market is becoming too optimistic about inflation as well. Inflation will continue to fall, but probably at a much lower pace than it has done in the past few months. That doesn't change the fact, though, that bonds still offer some decent value, especially in the U.S. But I would expect inflation to continue to decline, but still central banks will fail with the 2% target this year, and that's obviously could be an issue more for equities, I would say, than for bonds.
All right. So long as we stay up here above 4,700, the bulls and the bears continue this tug of war. Somebody's going to win. I'm not going to place any bets at this point. MODG. X Pro. Nice bullish engulfing candle, engulfing the previous 2 weeks of price action. Looks good. MODG. Top Golf, yeah.
Luca Paolini, Chief Strategist at Pictet Asset Management. Thank you so much. It's great to see you today, and we'll take your cautionary tone for 2024. Thank you. Coming up next, we're on the watch list, and we're going to look at some of the factors in the economy that could be changing and how maybe you should consider a few things for your portfolio strategy in light of this. We'll be right back.
Schwab Bank Investor Checking. The checking account built for investors.
You know, I don't know if you guys caught a conversation I had recently, but I was looking at my Charles Schwab account, and because of the treasury bonds or the yields that are locked in, those 3-month CDs that expire at the end of January, I was looking at the depository accounts, and they were all in JP Morgan. I found that very interesting.
That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Renner.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly. Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute user insights. Trade brilliantly with Schwab.
Welcome back to the watch list. I'm Nicole Petalini, live on the floor of the New York Stock Exchange. So, 2024 going to be a big year, big transition in the markets. I mean, as the pandemic moves further into the rearview mirror, technology always in focus. Jeremiah Buckley's with us, portfolio manager Janice Henderson, investors. Thank you for being here. So, our last guest really put out a cautionary tale. What say you?
Yeah, hi, Nicole. Thanks for having me. I appreciate that. So we're more positive. We're optimistic about 2024. We think, after a year where 2023 we had S&P earnings down, we think 2024 we're going to have S&P earnings up. We think there are a number of drivers of that. We think disposable income growing will help consumer spending. We think productivity gains will continue, driven by a lot of the technology spending that we've seen over the last couple of years. And we think the cost environment is also more favorable. We've seen commodity costs come in. We've seen transportation costs come in. And so we think, from a margin standpoint, we'll still see some improvement in 2024. There are a lot of sectors in 2023 that had depressed earnings because they were in recessionary periods. And a lot of those we think will normalize and see at least positive or flat earnings in 2024. So we're optimistic for earnings growth in 2024.
We heard positive comments from some of the analysts on NVIDIA, on AMD, on Intel. Are some of the winners of 2023 the possible winners of 2024 as well?
We think so. We think you have to sort through and go through whether the companies that did well in 2023 are supported by earnings growth. For example, NVIDIA, we do believe, earnings are up substantially from where they were at the beginning, or estimates where they were at the beginning of 2023. And so while the multiple, has gone up some, we think the growth outlook is also very positive. And so I think you have to sort through, each of the different companies that have had good returns in 2023 and look to see if the earnings growth and the outlook has justified that. We certainly think that there are a number of companies that that earnings growth has justified that.
So you do have some concerns about big ticket items, right? I guess we see wage growth on the rise. You do have some folks paying back student loans that maybe they didn't think they had to.
Okay, I'm just sitting here watching the markets.
But the one thing
Right at 4,700.
we do think that people have some disposable income. How about the big ticket items, whether it's manufacturing or autos or such?
Yeah, you're right, Nicole. So, we've seen a lot of the big ticket items, a lot of those are dependent on financing. And so we've seen interest rates go up. It's only been about a year where we've had interest rates at this level. And so we're cognizant of that. We're also, watching, throughout 2023, consumers work down their savings that they had built up over the pandemic. And a lot of those savings levels are back to kind of normal levels if you look at checking account balances, et cetera. And so there's less dry powder with consumers, but we do believe, as I mentioned before, that disposable income growing and costs coming down means that over the last 6 months, consumers have had real wage increases. And so we think that will support at least continued spending, but in the areas where those purchases, big ticket items that are financed, I think we're watching that closely because I don't think we've seen the full impact of those interest rate increases yet.
Right, understood. How many cuts do you think we really will see from the Fed?
That's a good question. I don't know that I can predict that exact number. I do think that the Fed is above normal. If we've seen inflation at around 3%, Fed funds at 5.5%, that's way too high for that type of inflationary environment. And so I do believe that we'll see the Fed come down. The economy is supportive of that. And hopefully we can continue to maintain at least modest real GDP growth so they don't have to be too aggressive. But I could see the Fed certainly coming back down to around 4% at some point during the year. But obviously, a lot will happen between now and then, and we'll have to watch that closely.
Right. So we talked about some of the tech type names. I mean, you could be more specific with the Magnificent Seven or AI if you want, but also weight loss drugs were also on your radar.
Yeah, so certainly one of the areas that we're invested in is we believe AI will transform the economy over the long term. There will certainly be ups and downs as we go through this adoption period, but we think the productivity gains will be substantial over time. And we think the companies with the largest scale, the companies that have the ability to invest substantial amounts of investments in technology will gain the most. And so that's why we believe that the companies with the greatest scale, those greatest, CapEx and R&D budgets will benefit from this technology. And so that's where we've been focused. We've also been focused on incretins or weight loss drugs and the impact of that, not only from the growth that can drive for certain pharmaceutical companies, but also the after impacts that might have on other companies within the economy, whether that be, consumer companies that consumption may be impacted, or even other companies within healthcare where the use of healthcare might be impacted by these. And so those are a couple of powerful trends, we think, in the economy that we're continuing to watch. And we'll need to, use that research to help us kind of determine where we want to be positioned as a result of those factors.
Right. And you said look for quality. I mean, how would you describe quality when you're looking for a stock?
Yeah, so the reason why we're focused on quality is because we think we're in an uncertain economic period, as we mentioned. We're still optimistic on earnings growth, but we still haven't seen that full impact of interest rate increases yet. And so that's where we want to focus on companies that have strong balance sheets that can weather any types of environments, whether that be continued strong growth or some volatility caused by these higher interest rates. And so for us, that's a focus on companies, like I said, with strong balance sheets who have dry powder so that they can opportunistically add assets, whether that be acquisitions or can repurchase their shares. We focus on companies with consistent free cash flows that can also kind of support that reinvestment, because we think in periods of volatility or uncertainty, that's when some of the best companies can enable themselves to add even more market share in those periods of volatility.
Jeremiah Buckley, thank you so much. Janice Henderson, Investors. Thanks. Joining us in the back half of the show, we're going to have a lot more because we have a guest who likes names like Merck, Zebra Technology, Thermo Fisher. We'll get an explanation on that. In the meantime, take a look at some winners and losers on the S&P 500.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading.
What do you want?
And sharpen your skills with immersive online education, crafted just for traders. Also, you can trade brilliantly.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Renner.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. Also, you can trade brilliantly.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Platforms to your unique needs with nearly endless customization.
You can clearly see for the last 3 trading days, it's just fruitless to try to fight this trend, which is non-existent. Momentum continues to be squashed. We're just moving sideways, not doing anything.
Today on the right side of your screen, but you can also see on this chart some of the selling that's come into play, as you mentioned, throughout the week. So look at the move off the highs from the end of last week, around 48.40, 48.50, and again, pretty well defined trend lower. So not the start to the year that the bulls were looking for, but let's take a step back and show you where we are on the bigger picture here. And real quick here, just I want to show you before we do look at that bigger picture where some of that selling came from. The left side of the screen,
-800.
the S&P is the right side of the screen. This is yields on the move higher, the 10-year back up to 4%. So I think that explains a lot of the weakness we saw. Again, with the S&P back down 47.02 this week. Now, here's that step back. So you can see we've come off the highs from last month, all-time highs of 48.41, and back down here. So 100 points plus to the downside. Take one more step back. I'll show you. So holding above the 50, holding above the 200-day moving average. Well, I think a lot of people anticipated that we were going to see some selling at some point in the new year. Maybe not necessarily as we came back right away this Tuesday, Wednesday, and then again yesterday a bit here. But I think, for the most part, when you look at the rally that we saw off the end of October lows, this is a small blip on the radar relative to the gains we saw at the end of last year.
Yeah, look, I mean, a lot of the folks that I talked to here just feel that maybe there was just some profit taking that went on this first week, that the RSI really was showing that the market was a little overextended, so they're not surprised to see a little bit of a pullback today. That being said, treasuries, we see a spike, and we have folks calling for 5% plus. Your thoughts?
Well, I mentioned that 10-year, we did see a spike right up to 4.1 for the most part. And while we have come off that, it is a reflection, I think, of how investors and traders have been on the edge of their seats. We've got a lot of pricing in of expectations for cuts. The Fed's kind of pushed back against that a little bit. We're not sure where that middle ground is going to fall. Ultimately, 6 versus 3 are the extremes. I think we'll see something in the middle. Speaking of in the middle, after a spike down to 111.06, you had the 10-year spike back up to 112.10. So we're talking about a point move off the lows to the highs, and look where we are, right in the middle of the range we established throughout the day today. But similar situation here in terms of what we're looking at with the S&Ps, the mini contract, the selling we've seen throughout the week. So treasuries to the downside ultimately has created an environment where we're seeing yields to the upside, that mirror image, right? You've got the 10-year yield here right now. Futures we're looking at 3.79 up to 4.1. We're just shy. That was that spike today in reaction to the jobs report. And then we came back off to 396, and here we are pretty comfortable hanging out right around 4% here, Nicole. Let me show you bigger picture. Look at the 30-year on the left, the 10-year on the right. I mean, this move off the peak highs that we saw is what fueled stocks to the upside into the end of the year, those all-time highs we were just talking about. So, again, to see the yields start to inch the way back up a bit here this week, I think you can explain that's a big part of what's behind some of the selling we were just talking about in terms of the S&Ps, and it gives us a lot to look to into next week, right? Because we've got CPI, EPI, some closely watched inflation data, which could continue to perpetuate some of this intraday volatility we've seen, but yet still not really a lot of follow through one way or the other in terms of the trend.
No, then listen, fine. Thank you so much. Great to see you. Appreciate it.
Let's talk some strategy, the stock sectors. Christopher Bartow.
All right, back down below 4,700.
Capital Group. Thank you for speaking with us here. Let's start with your outlook because that would really define your strategy, right?
Yeah, definitely. Thank you for having me and Happy New Year. So sectors we like heading into 2024 and sectors we've liked over the last few years are mostly revolving around pharmaceuticals and diagnostics equipment, as well as warehouse automation and industrial technology. And when I say technology, we kind of want to be selective in the technology companies that we're owning, right? We saw the Magnificent Seven, quote unquote, do really well last year, but there's also other areas of technology that we like to own. And there's also other areas of the market to invest in, as like pharmaceuticals and diagnostics equipment.
Yeah, understood.
Low
So
ticker
with
at
that,
minus
let's go
800.
to your pick. Is there a theme on some of the names that you choose and why?
Yeah, definitely. So there's always an underlying theme to investing in an equity, whether it's a secular trend such as warehouse automation and industrial technology. You're kind of seeing the shift to the quote-unquote on-demand economy, where consumers want something within 24 hours. You have Prime delivering packages within 24 hours. And companies that make that possible, like Target, Home Depot, Lowe's, is Zebra Technology with their barcode scanners.
Yeah. So when you look at a name like Merck, how does that fit in there?
Yeah, so Merck over time has been benefiting from the aging population and cancer treatment. So as we know, the long-term trend, people are getting older, demographics are aging, and that just means that they essentially need more drugs. And Keytruda is a great drug that has done well for about 35% of their sales, and they have a lingering patent expiration in 2028. And we think that management has been doing a very good job to fill that void through M&A and investment.
Yeah. How about Zebra Technology? A lot of people don't know.
Netflix went ahead and closed it.
Yeah, that's why I'm picking up a lot. Zebra Technology has been a company that we've been following for years. They're essentially a leader in enterprise asset intelligence and automatic identification and data capture. And essentially what this is mobile computing, RFID, which is radio
Extreme low ticker at
barcode printing, workflow automation for e-commerce, manufacturing, logistics, etc. And previously, Zebra was hurt by the pull forward in demand during COVID. And then in 2023, kind of saw this digestion occur. So inventory over the last few months and the next year, this year, has been normalizing, and the end customers are normalizing. And Zebra is basically working with customers to manage their budget for the next fiscal year. And the great part about Zebra is 86% of Fortune 500 companies are customers across their hardware and software. So they kind of have that margin mix where they can sell the hardware, then they cross-sell the software, and then as the cycle refresh, they upgrade the hardware and software.
Yeah. Do you maybe have to convince people that this will be an outperformer considering it's been on the downtrend? I know it's off the 52-week lows, but it's been a name that, month to date down 7%, 1 year down 3%. Do you have to convince people that this is a good one?
Yes, there's certainly a lot of convincing, and I would argue that about 90% of our job as analysts to convince the clients that this is a good company to hold over the next 5 to 7 years.
I like it, Paticus.
So if you look at from 2010 to basically 2023 or 2022, they did very well, but then you kind of saw where that pull forward in demand happened. They shot up a lot in 2022, and then 2023, everything kind of, the roosters came home to that, and they basically got hit very hard, rightfully slow. So we kind of view that as a buying opportunity based on our forecast for the next 5 to 7 years.
And last but not least, Thermo Fisher.
Yeah, Thermo Fisher is basically the largest supplier of instruments and consumables as well as chemicals. Over 400,000 customers across 50 countries, so they're global. They have growing market share, expanding product offerings, and as we were talking about with Merck, healthcare expenditures are only increasing. They're growing roughly 3 to 5%
and Thermo Fisher commands around 15% market share. And it's a very fragmented market. So you're going to see growth through acquisition and merger. So their long-term target for organic top-line growth is around 5 to 7%, which is growing faster than that 3 to 5% total addressable market. The last aspect of Thermo Fisher that we really like is 74% of the revenue is recurring. So that gives us some good insights into the durability of the cash flow and the revenue and the earnings for us to model out. So we really like that aspect of the business.
Thank you so much for Capital Group. Appreciate it. Have you on the show today.
Thank you.
Go ahead. Let's dive into those jobs numbers. What do we really need to know? What key points of data to tell us more about the Fed's move, either higher or lower for the Fed? Coming up.
All right, IWM. What are you doing, IWM? IWM. I got a credit spread, call credit spread on IWM. Ooh, looks like it's going to drop more, right? Looks like it could drop more. Let's look at the weekly time frame. IWM. I have a credit spread, a call credit spread. I sold the 205. I bought the 210. So I'm looking for this to drop more. I could leave that one alone. I don't think it's going to bounce much. Could bounce next week.
Trading the trending names every day. It's fast market. Ready for you, ready to go. I'm Kevin Hayes. Catch me on Fast Market. Weekdays at noon on the Schwab Network. Cut the cord on the way you look like
More downside. So it's probably all of the indices going to go with SPY topping out. Qs topping out. Let's see. Meta.
Extreme low, take a look.
Tesla.
Get caught up and catch the wrap at SwapNetwork.com.
Snowflake. Google. Google's still fading. Let me see what happens if I try to sell some Google. Google credits. How far can this go? 140?
Stephen, we've gotten in several reports this week, including arguably the most important one, which is jobs report. What do you think? We got a couple ISMs, gold, this jobs report. What's it all telling you?
Well, it's all telling you the pessimists are a bit too wrong about the economy. The economy is probably growing at or slightly above trend after having, averaged probably close to 3.5% in the second half of the year. So it's a little bit of a dip in economic activity, but nothing to be worried about. It's an economy returning to trend after running well above trend at the end of 2023.
Call.
How do you feel about some of the numbers we've seen, Kate, or specifically the jobs report today?
Well, we are seeing resiliency return to the jobs market, but that doesn't mean that the skills imbalance is gone away. What we see in serving some of the world's largest global companies is that there are still skill shortages and talent shortages that are real, especially as it relates to more technical jobs, transformation-related jobs, and very specific skill sets.
Yeah, I've been hearing actually a lot about that today. And we did see growth in leisure and hospitality and government and healthcare.
But to your point, I think there's a certain skill set in different positions that is still very much needed. Let me ask you this, Stephen Risciuto. The wage growth that we are seeing, the 4.1% print year over year, a lot of folks were expecting 3.9. They were hoping for 3.9%. Is that inflationary or no? Or is it just because it's above inflation, the Fed's okay with it? It's a non-event, or is it an event in your mind?
Well, it's an event that's telling you they're not getting back to their target as quickly as they'd like. It's also an event that goes exactly to Kate's comments about imbalances in the labor market. Even though the Fed keeps on talking about a better balance in the labor market, there are still substantial imbalances. There is a worker shortage. There is a skilled worker shortage, as Kate indicates, and that's the reason why
Low tick alert -800.
The way they are. But I also think there's even a worker shortage down in the lower skilled portion of the economy too, because the population growth hasn't really been picking up, and a lot of the immigration that's been taking place, whether it's legal or illegal, the ones we're making legal, we're not allowing them to go back into the labor market very, very quickly. So we're creating part of this problem ourselves by the policies that are being implemented in Washington.
What does Google report?
Kate, do you see some growth at or above the trends, or are you worried?
Are you referring to wage inflation?
Well, no, in general, about our economy as we take in all these pieces. Next week we'll get the CPI print. But, for example, the ISM manufacturing showed a little bit of growth. It's still in contraction territory.
Right. I mean, I would say the economy is still imbalanced, and that's what we're seeing here. We're not worried. I agree with Stephen's comments that the economy is performing above trend. We seem to consistently want to talk ourselves into a more negative point of view. There is a lot of work out there. We see companies, in today's environment with 20 plus enterprise transformation initiatives on average. We just conducted some significant research in our client base to say what's on your agenda for the coming year. There's a lot of work out there, and there are highly skilled workers that these clients need. And so they're looking at a labor market that's both here and
All right, Google, I'm looking at it.
very global, and looking for talent wherever it resides in order to put that talent to work. So, I remain optimistic about the power of the economy, and I'm not worried.
Yeah. I have only a couple seconds, Stephen, just on bonds. What is the bond market telling you quickly?
The bond market's telling me that people believe we're going to get back to 2% inflation, but they're not willing to believe we're going to get back to lower than 2%. A 2% inflation rate would give you a fair value trading range of 3 3/4 to 4 1/4. We're smack dab in the middle of that range. So the market is sitting there saying the market's fully priced. So for me, the question is not whether the market will go appreciably lower. It's whether or not the market's going to have to adjust to a higher inflation environment, because the labor market imbalances that we're talking about are sustainable, and they're probably sustainable through a good portion of the year, and therefore we may wind up with inflation rate bottoming out well below the 2% level, and therefore the bond market may have to very well adjust.
Okay, thank you both so much. Stephen Risciuto, U.S. Chief Economist at Mizuho. Kate Racine, CEO at RGP. Thank you. That's going to do it for us here on the watch list. I'm Nicole Petalidi. Oliver Rennick, market on close, next.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this Carl with Schwab.
Have a choice in how you invest with Schwab.
I'm Nicole Petalidi, live at the New York Stock Exchange, Texas, on Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360.
Yeah, Google, you really want that.
Stock exchange on Trading 360, only on Schwab Network.
Welcome to Schwab Network,
Daily live exclusive content tailored to today's investors.
broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights,
Example trades and stock-specific analysis featuring the smartest minds in the business.
no politics,
No noise.
analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
And on demand.
Low tick alert minus 800.
7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day. Binge watch the market with the Schwab Network. Tune in 24 hours a day.
All right, SPY moving lower.
Schwab.com for all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
Be part of the latest commodities action on Future with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
I'm Oliver Bennett. Get ready to cut the cord. Market on close is coming up. Good afternoon. Welcome to Market on Close on the Schwab Network. I'm Oliver Bennett. We've got an hour left in today, and it's been a heck of a Friday. Right across the board right now, you got to do the double take because we've been going back and forth all day. Since jobs came in pretty strong this morning, beating expectations, then we got an ISM report that was weak, way weaker in our beloved services category that's been the bedrock of the economy, which barely showed expansion. Then the market totally reversed. And then it reversed again. And so now we're looking a lot more like we did at the opening bell and pre-market than we did around lunchtime. That bomb's down, dollar up, barely right now the dollar, but it is green after it got blasted earlier. And stocks down, as you see. Even though we're looking at basis point moves, they're really not big. We've got absolute chance that we end on a positive note higher for all these indexes. But the intraday swing to the downside, kind of dramatic, especially because we really portrays the way the market just doesn't really know what to do with this information. And I have to agree, I don't think really many of us do, because it's quite mixed. And there's a lot of ways to interpret economic data when you're looking at a rate of change where things have deteriorated, especially like the ISM services showed. But then we're still at strong nominal levels, like we saw from the number of jobs we printed, almost 220,000. So what do you make of that? Right now, I think a lot of it can be seen in an unchanged market, basically. Forces that are pretty well at odds. You track the dollar and bonds throughout the day, but then you also extend it through the week. I think you get some clear answers. Firstly, the dollar lunch right now does not reflect the action today. Look at the intraday moves. Dollar yields, this is the 10-year future, up early around the jobs report. Then we start fading the move. That's important. We started fading the jobs pop in yield in the dollar before the ISM services came out. So the market was already having second thoughts about selling bonds and buying the dollar after the NFP. But the ISM services kind of bombs, especially with the employment print below 50, and then the dollar just crashes down almost 0.5%. 10-year dives back down. Then we spend the rest of the day grinding back. Now, there's also a sort of ancillary story with Apple we'll get into later on in the show that's weighing on the market too. But looking at the way dollar and yields have been stuck together, that is your tell that the market's thinking about the Fed. When the dollar and rates are moving in the same direction around economic data, that means we're thinking about the Fed. We're thinking about cuts, of course, namely the one in March that is supposed to be the kickoff for a big series of cuts that the market's been looking for. But if you actually look at the way the 2-year and bonds are trading today, particularly looking at the yield spread over the last 5 days, things have changed kind of dramatically here. We're actually back to the highs of the 10s to the 2s spread. Now, if you recall, after the FOMC showed dots, I argued that the spread should be widening out instead of flattening, because the economy is still pretty darn good, and if the Fed's going to loosen it even more, that should be good for growth. Kind of seems like this week, with the big move in the 10s to the 2s spread, the market's kind of coming around to that view. Now, we haven't broken out in a big way. Bonds, of course.
All right, let's look at Microsoft. I'm just looking at some potential call credit spreads. Microsoft looks pretty interesting. Let's see, Microsoft. Looking at some potential call credit spreads to hold for a couple of weeks. Okay. Let's see what we got here. Microsoft looks like it's on a downward trajectory. Let me just check. $370. Oh, that's pretty close. Microsoft, 370, 380. Microsoft, 370. I'm looking at credit spreads. When does Microsoft report? That's most important. Have to know when earnings are coming out. You don't want to get caught in an earnings pop. Let's see, Microsoft. Microsoft. January 23rd. So Microsoft reports on the 23rd. That's Tuesday. 3 weeks from now. Tuesday, 3 weeks from now is Microsoft. So let's check out Microsoft. Microsoft. So they report on the 23rd. Let's see what the 26th looks like. Sell, call. Sell a call on 126. Their earnings are 123, so we'd have to exit prior to that. Let's see what this 126 looks like. I would want to do at least 380 maybe. Let's see what 380 looks like. Sell the 380, buy 385. Oh, that's pretty interesting. Microsoft's pretty interesting. Call credit spread, looking for Microsoft to move a bit lower, but stay below 380. I like that.
It seems like the market's kind of divided on that today. Absolutely, and you're seeing it play out in real time. Total bipolar action today. It's like, love it, we hate it. You love it, we hate it. Yeah, we hated this number. Whoa, what's this ISM? How should we weight that against the wages part of payroll? Which is more? Which will Jerome Powell like more? Will he ignore ISM or will he ignore wages? Probably not going to ignore wages. Where do you think we are right now? The ultimate conclusion. I know we haven't closed yet. Yeah. But bonds are back down pretty solid. To me, we might be getting that kind of writing on the wall for how we're going to end today, because bonds rallied hard on ISM. The dollar crashed hard. The bonds are back now down, and the dollar couldn't hold the sell. The dollar couldn't hold the selling, but it also can't really hold a bid. But do bonds tell us kind of the story here going into close? I think the way this market ends the day is critical because there's no real strong economic data. If you look on the calendar,
pretty thin until Thursday when we get CPI, and then earnings on Friday and PPI on Friday. So there's a little. I always say this on a Friday. There's room next week for not much to change the narrative if this market closes weak today. So that's the way I look at it going into the end of the day. If this market closes down, if they take it down from here, even slightly, I don't think you buy it. I think you wait until Monday, maybe the nibble.
Is the message then, because today, let me pull it up, because literally you got to check like minute by minute.
Okay, calls.
We came into today with the odds at 70.
380.
And if P came out, the odds of the March cut dropped to 50%. Now, it's at...
Problem with selling a credit spread at this time of day on Friday is Microsoft could bounce. That's the only thing. I don't want to do anything right now. Yeah, Microsoft bounced to 50. Yeah, I'll leave that alone. I'm thinking about Microsoft as a potential trade, but gonna pass because it is late in the day. NVIDIA, Boeing. What does Boeing look like? Boeing has a credit spread. Let's see, Boeing. All right, so it's sitting there. Could move lower. It all depends on the indices, I guess. MDT, Medtronica. All right, that's very bullish. Nice looking chart. Medtronic continues this trend. Healthcare stocks have been the place to be this week, eh? Healthcare, consumer staples, those have done very well.
Year-over-year wages, the market has a completely different posture.
Okay. I think it fuels a little bit after this week. Bonds stay where they are right now. That the kind of the onus has shifted back on the bulls to an extent to get more confirming data that'll bring us that cut.
Bear call spread run. Let me see. Run. Run. Yeah. Let me just take a look at it, Jennifer. Let's see. Run. Got a bear. Yeah, you got a bearish cross. Stochastics moving lower. You got volume showing sellers. Sun run. And you're looking at the 16-17 for the 2nd of February. Call spread. Sell the 16, buy the 17. Yeah, that's pretty good. Actually, that's real good. That's good. It's a good one. A good one. Let me just check. Sun run. When is earnings? That's the only problem. Maybe that's why this is January 31st. Jan 31. Earnings whisper. It's not confirmed. Not confirmed. 1228. Okay, well, you'd still be safe. With 80%. 80% is telling you this is going to move a lot. I like it. I would like it. Yes, nice. I'd just like to know why this is $40 for 80. That's pretty inexpensive if it continues lower. $40 profit with max loss $57. So if you did like 5 of those, 215 versus 285 max loss. 16. Sell to open. Oh, that's why. You're selling the 16, and it's right now it is 16. So you're selling in the money. That's why it's so high. So let's go out a little ways. Let's go to, let's say I still like your thesis there, Jennifer. So let's see what happens if we sell the 20 and buy the 21. Yeah, you don't get much when you start to look at it that way. Still, the implied vol is pretty high, 20. Yeah, I don't like it. Okay, maybe a put vertical instead. Okay, so what's it's 316 on the East Coast, the West Coast. Let me just check and make sure I don't have anything expiring in the money today. Today's 12:05. 12:05. The only thing I have expiring today is Netflix, and I just closed that for $5. I made 99% profit on Netflix. That's always fun to ride it into the last trading day of the 0-day expiration. Okay, okay, so let me just double check. I don't see any 12:05s here, or 105s. January 5th, I don't see it. Nope. January 5th, no. January 5th, no. I don't see any January 5th. January 5th. No. Okay, let me make sure my son's account. We don't have any 12:05s on my son's account. Do we? No 12:05s. Okay, good. All right. 105s. Kind of late in the day to be doing anything because you never know what Monday's going to bring. Sure, anytime.
as we get sort of the liquidity back into the system more normalized. But it's just really hard to say, you know, even the Fed doesn't know where that.
I have March.
Surprised at the resiliency of the economy, right? Because you think that you tighten that much over that span of time and you cause these rate shocks. I mean, look at what it's done in housing, right? We have no inventory because nobody's gonna, you know, refinance their mortgage that is at 2.5% or 3% at, you know, 6 or 7%.
90, 95.
So all of these sort of post-pandemic anomalies still have to sort of work their way through the system and kind of normalize because you don't have the normal inverse relationship in housing to, you know, mortgage rates actually, because of this whole supply situation. So all of those things need to continue to normalize, but, you know, historically speaking, Powell has spent pivot in his back pocket should we need it, because certainly when you're tightening at this rate and certainly knowing the lagging effects of monetary policy, there, you know, the more debt that you have and the, you know, more liquidity that you remove from the system via the tightening of the balance sheet and what have you, you know, you increase credit risk even though it's not showing in spread. So hopefully we don't get any nasty surprises this year, but you know, we should be fairly defensive and ready for that because.
All right, Lily is moving a bit higher. Lily. All right, Lily.
And when we do the bonds, then it should respond in a traditional manner, right?
I would think so. Okay. Yeah, I would think so. Unless there's some sort of anomaly like we can't get demand in the bond market, right. We've got an oversupply.
If it starts with an auction.
Dalio is calling for that. We haven't seen it
Many
yet,
are.
you know.
They've been calling for it for a long time.
Yeah, so we haven't seen it yet, but it you know, it certainly is a possibility and something to look out for.
For sure. We had to put that off. Don't like right at all. Francis, real quick, you're a bit of a technician too. Got a level for us to watch and whatever your go-to chart is right now. S&P.
I'm just looking at the S&P, just sort of looking at that simple momentum. You know, basically, if it has a minor pullback here, it should continue in the previous direction. Should continue the rally, and I'm looking at 4668, which would be a bit of a pullback, but I think if it stays above that, then we could see some upward momentum.
Okay.
Continue.
About 20 points below where we are right now, then almost exactly. So, all right, we'll keep our eyes open. Thanks a lot, man. Thanks, Casey. Great stuff. Thanks for joining us from Optimal Capital. All right, positive view here on risk assets, as long as there's no credit event. But beware of potential strengthening in the economy to surprise and push that rate cut out a little bit. When we come back, let's talk some more about the restaurant business. We did a little deep dive yesterday into some favorites. We're going to compare it to our next guest top picks. There's one overlapping that it seems everyone's hot on. I'll tell you what it is when we come back. Markets right now are still hanging out basically where we were when we started the show. Firmed up. I'm still selling. Wouldn't get your hopes up for a big rally.
Lily's about to go here, folks.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window when other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me always put people be proud of offering.
Lily is.
I think he'd be extremely proud of me.
Lily. Lily. 119.
Trading the trending names every day.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com to learn all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device, for free. Schwab Network.
to look forward,
Find the next trend.
from every click to every tick.
There's no fear of missing out on next trend investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
We interrupt our macro coverage to talk some restaurants. A little grub with Jim Sanderson, equity analyst at Northcoast Research, covering the industry. A couple of specific names that jumped out from your coverage after we had a similar conversation yesterday. Jim, welcome back to the show. Happy New Year.
Hey, thank you. Happy New Year to you, all of you.
All right, one of the first things I see is that you like cheesecake. It was the guest yesterday's top pick. Why is everybody hot on the cheesecake?
Well, what I like most about Cheesecake Factory is they've got a very sophisticated portfolio of brands from the acquisition of a company that they acquired back in 2019, Fox Restaurant Concepts. They've got a lot of great new innovative restaurant brands that they can curate and develop over time. North Italia is probably the most visible example in the marketplace. They've got about 40 restaurants that they operate throughout the United States. This is what we would describe as a casual dining experience. So a little bit more premium price. It's a nice dining experience. I think if you're going out to dinner and you want a special occasion, North Italia is the type of restaurant you would aspire to. You can be willing to pay a little bit of a premium for a good time, so to speak. And I like that setup. A lot of really good feedback about North Italia. Economics look good. The store margins are starting to recover. Traffic is nice. So it's a really nice business for Cheesecake to develop. They've already said they can go from 40 stores to over 200. So it can really become a meaningful catalyst for unit and revenue growth for Cheesecake Factory. And I think the way we look at Cheesecake Factory is, 5 years from now, 10 years from now, the stock CAKE could really be a portfolio of brands where Cheesecake Factory proper is a minority of the stores that they operate. So it's a great opportunity for them to continue to develop these emerging brands, flower salads and others.
Well,
We like the value.
they don't have one in Chicago, no North Italy, but I imagine it's a pretty tough market to break into. Also,
It
not
certainly
in
is.
New York City either, but I guess again, kind of same story.
You're exactly right. They've done really well in the UMS Southwest, and they're picking their markets wisely. And I think they'll continue to do that. And they've got plenty of runway for development. So it's a great concept, and it piggybacks on the stability of the Cheesecake Factory business that they've already got with over 200 stores.
So there's a growth element here that maybe doesn't exist for the flagship name Cheesecake.
That's exactly right. So Cheesecake Factory, the company, expects to grow units operating weeks by about 6 to 7% per year for a number of years. So they've got a really nice growth from money. Cheesecake Factory, however, they're just going to add just a few stores a year. So that growth rate is a fraction of that. It's about 1 to 2%, so low single digits. So the real catalyst for growth is really going to be these other brands that go beyond Cheesecake Factory. And then the core brand will more or less be kind of a legacy brand that they'll obviously want to operate and maintain. But the real growth is coming from beyond Cheesecake Factory itself.
Got it. All right. Want to make sure we hit at least one more. Domino's with the buy rating. I think that one's interesting given the amount of volatility it's had, but it's back at 52-week highs. It was a very gappy year for Domino's, but it's now at the high end of its range since mid-22. How do they get back to the glory days of like being a pseudo tech company? Is that over?
That's just beginning. That's an excellent topic. I think that Domino's is really leaning into technology. They've been thinking for a while about how they can help their franchise owner operators make this business run better, not only in the way that they market and engage the consumer on the top line to draw in more traffic, more orders, but on the bottom line, how they can improve throughput, how they can make the business operate better. I think the vision that Domino's has laid out is they're really looking at introducing a new operating system that probably by the end of fourth quarter 2024, and that's going to enable them to leverage digital marketing, digital mobile ordering to allow the consumer to really engage directly with the brand, to post orders more efficiently, and then for those orders to be transmitted to the restaurant for execution more quickly. That's going to flow all the way to the delivery where they aspire to develop a system where they can actually get the delivery right
minus 800.
quickly. That's going to improve throughput. It's going to improve productivity. It's going to do a lot of things just to make the pizza delivery more efficient, more attractive to the consumer. And it's going to be very competitive already on price. They partnered with Uber Eats. That's going to be an interesting revenue growth driver in the 2024 and beyond. The third-party market is valued over $5 billion, and I think Domino's has been outside of that market. They're going to, go back in. They're going to engage. They're going to get their fair share, and I think they're going to do a great job of executing. Because even though these Uber Eats orders come from Uber, they're going to be delivered executed by the Domino's delivery drivers. That means that Domino's will control the quality and execution of the delivery process. I think that is going to help build the credibility of the Domino's brand on Uber Eats and really give them access to that market share that they're going after.
All right.
There's a lot of good stuff going on.
They both win together, I guess, Uber and Domino's. It seemed like the market wasn't sure about that at first.
I think Domino's was less certain than Uber. Let me put it that way. Right. I think Domino's has finally found the right mix. Yeah.
All right. Cool. Interesting. Okay. Jim, thanks for the heads up.
My pleasure. Take care.
Yeah. Let's fly to North Italia. Have to go to the Midwest. We're in about 10 states. I saw 3, 6, about a dozen, more than a dozen states. All right. Thanks for sharing some more to us. Let's talk some options when we come back. Count down 3 bullish trades in today's action. It's actually a pretty good session for the airlines. Look at JetBlue at 5%. We got to talk about that when we come back.
I remember when I first started flying, and we would experience turbulence. I would watch the flight attendants. They're not nervous because I'm not getting nervous. Financially, I'm a flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennie.
All right, just sitting here at the lows of the day. I don't want us to close below 4,700, but it looks like we're going to.
Available anytime, anywhere, on any device for free. Schwab Network.
Okay, we've got 29 minutes to go, 29 minutes to go. And the market's not making much progress. We're below 4,700. Key level. We're close enough that we could still hang out here like we've been doing. But it looks more bearish, so I'd be more risk off. There's a potential that we just lose it through here. Maybe what's a call credit spread on the S&P look like? I'm a little skeptical of doing that, only because we could see a big move. Lately, it's been $5. VIX is still at 13, so $5 above where we are right now. 472. $472.
Low ticker minus 800.
They did announce some new routes in the Florida space, another international destination also, so maybe that's why it's up a little bit more than some of the other airlines within the sector at this point. But we did see some bullish flows in there out in the January 19th monthly cycle. Trader bought over 20,000 with a 7-strike call. These are really cheap. They're only about 14% debit that they paid.
472.
Upside here.
Buy 475. Yeah, it's not worth it. Just looking at potential call credit on SPY. Really should have tried earlier today at the highs of the day. Or puts SPY 470 was the high. Okay, so if you look at the, let me see if I still have it here. No, I deleted it. Okay. Okay, so the expected move for the week downside was 469.98. We're $3 below that level, so more than likely we're going to see what was this week a $5.33 expected move, one standard deviation. Probably going to be closer to $6-7 for next week. So standard deviation will be plus or minus.
Well, this stock outperformed most of the banks last year, up 27%, up 1.5% this week on a down week, breaking that 9-week string for the S&P 500 to the upside with weakness this week. Earnings on next Friday, so 7 days out. Here we go. So look at that parabolic move from those October lows, Oliver, getting a little bit stretched, but the sell side analysts have come out over the last week or two as interest rates have stabilized near that 4% level on the 10-year, that the banks are going to outperform because
Zim. All right, Zim is starting to move again. Zim's turning back up. Mm-hmm.
Barclays came out, raised the price target on this one to 212 from 186 today, ahead of those earnings next week. Now, typically in the option market, we know this, that implied volatility goes up on the stock in the options before an earnings event, right? Because you have that event risk. But the banks are always really subdued, like the moves happen before the earnings. Now, the unusual option activity I saw was out in the January 19th monthly cycle. So it extends another week past the earnings date.
It's like an early earnings position that they're putting on.
Yes,
Right.
definitely. 182.5 strike calls, though. They bought 10,000 of those. Average debit of 50 cents. So they're not paying a lot of option premium for these out-of-the-money calls. The break even of 183 over the next 2 weeks. That's 6% above the current share price. It's about what the standard deviation move is over the next 14 days in that option series. Put call ratio
Going straight up into the right now, so why wouldn't it get there? It seems like you just take this line and project it out, and pretty good chance you hit your strike, right?
The thing that concerns me about going into, somebody taking this bullish view over the next 2 weeks, capturing that is the fact that typically the banks don't have massive moves post-earnings, which is why the anticipated market maker moves on these stocks isn't relatively big compared on a percentage basis to other names or other sectors. So that's a concern, but they're giving themselves an extra week past the earnings for this thing to rise. Put call ratio 1.3. So typically on a stock, put call ratio is 0.7, right? So more puts are trading than calls today, even though
All right, Zim integrated. Let's see.
I don't think a lot of people realize how good the banks look right now. It's kind of mind-blowing.
Yeah, how they rebounded the last 2.5 months.
Well, they took part in the November upswing because they ironically, they're just like kind of old school mindset where people go, higher rates are good for banks.
Yep.
All right, but higher rates, the way the Fed was jacking them up, are not good for banks, as we saw with the regional blow up. Right? So the market has rallied them amid the pricing for cuts, but then at the same time, if we don't get those cuts,
All right, Zim.
jacking them up. So the time kind of finally seems like maybe it's arrived for the best financials and obviously
Zim.
And a lot of people think that lending grows so much that it's going to have that rebound here in the next.
Right. The other thing, for instance, there's no sign that like when he's in collapse. Last trade in video, we know the story here. Hitting with the options trade. What's going on? It never goes down.
Buy-in January 19, 500 strike calls. You're not going to capture an earnings event in this one. 2-week trade, traders bought 9,500 strike calls. The average debit of $9, so you're paying a pretty hefty option premium. So you break even on this one, 509 to the upside over the next 2 weeks. That's 4% above the current share price. So by percentage standard moves, that's not big at all for NVIDIA. All volume
Currently,
now remember, all-time high 505 at the end of November, Oliver. That's acted as a basically a resistance point at this point. We have not been able to crack that 500 and maintain any upward momentum here. So if you look at NVIDIA over the last couple of months, since those all-time highs, it's been in a relatively tight range. This is an expensive stock. If this trader thinks we're going to hit new all-time highs in the next 2 weeks in NVIDIA.
Wow. All right. Well, look, I mean, things like doesn't break. Doesn't matter what else happens with big tech. It's just out in the world of its own pretty much. It don't like sympathize with the trader. Thanks, Tom. For the look here, a bunch of bullish options. Trading happening today. Generally deep session, but still at 20 minutes left. It's very good day for the oil. We'll talk to them about commodities when we come back. We'll get into the details on two Apple stories as well. They're pretty much going to finish this week for the stock like it began. Soft. It's been a tough week for Apple. Just headline after headline keeps the pressure on. Not a big sell-off today, but it is doing worse, notably worse, down 0.8% of the rest of the market, which is very much in shooting range of neutral right now. Be right back.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Accelerate your market knowledge.
All right, market's starting to bounce.
Real-time example trades, a full hour of trading.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
All right, we got 2 minutes left to go.
There's no fear of missing out on Next Gen Investment.
Available anytime, anywhere, on any device for free.
What's Netflix doing? Netflix.
I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
It's been a volatile day for stocks, but crude oil has been a lot higher for pretty much the entire session.
Yeah, Netflix working well.
Fun Friday here. What do you take away from the commodity basket for the week? As crude oil seemed to, hang into the ride pretty good.
Hanging in pretty good. Up $5 on the week. Just take a look at that. We traded down to the level 69 and change. 3 weeks ago, we were at a 6-month low. So I think the big picture, we're still trending lower from those set highs at 95 and sliding lower. We did have some negative stuff out there as far as supply, build up in gasoline supply here in the U.S.
get it filled up, and that's on all supplies. So right now, that sector is kind of, can say that it's well supplied. I think it also could be end of the week, first of the week, we're heading into the weekend. It's been a while since we've had a weekend where we haven't had some geopolitical risk. So not surprising to see some people step in here and try to either get even or maybe step in front of a long trade. Bigger picture, there's a lot of resistance at 77 bucks. Now there's a trend line there. There's an old high there. I don't think you can really say that crude oil will turn the corner until we start settling above 80 bucks. So for now, trending lower. It was a good week for the bulls. A good opportunity to take some profits.
Seems like we just print, puts, just start selling puts below, 70 bucks basically. Is that the crude trade? I mean, that's been like vintage now for a year. And, forget all the geopolitical drama and trying to gain this. Who's sitting drones where and what shit and stuff. Why not just sell puts? I mean, like, what's it going to take to break crude oil 70? It seems like a lot.
So remember, somebody sold
Zim is on the move.
pandemic thing. It got sucked in and delivered.
So it just moved up.
So people are scarred still. They don't want to have a living room full of oil.
There's free money picking up nickels in front of steamrollers. Anytime you sell a put, you're taking that risk. It's free money until it's not. That's a strategy. Even in a trading range. I'm looking at out of the corner of my eye here right now. Go back to March. We got down to 65 bucks. Then we went to 95. Lo and behold, we just got down here around 65. So, for the past 6 months, I know we've had a lot of ebbs and flows, but that's been a trading range, right? 65 to 95. So what do you want to do next time? If it gets back up to 95, instead of reading the headlines saying we're going to 150 oil, maybe you sell some calls there, or vice versa. If we get down around that 65 to 70 level again, we can sell some puts. But if you do that, you've got to understand that the board is Pandor's box. You can get wrong if your timing is wrong. So, at the end of the
All right. We've got 11 minutes to go. 11 minutes to go.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you have all the financial tools and support to secure your financial future. That means a lot for my community and for every community.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device or free. Schwab Network. Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights,
example trades, and stock-specific analysis featuring the smartest minds in the business.
No politics,
no noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere,
on any device for free.
Schwab Network, empowering every investor and trader
every market day.
Power your portfolio with the Schwab Network. Schwab Network, available anytime, anywhere, on any device. Schwab Network.
Okay, we got 8 minutes to go. 8 minutes to go.
What do you think about this session, Joe? This is kind of a wild day. We're up, we're down, we're stuck, and it looks like we're trying to close it out.
Watch highlights of your show, you'd say, hey, nothing happened, but just the volatility intraday is kind of all over the place. I mean, we've seen big moves in the market today. Really kind of kicked off with the unemployment numbers, and then we had the ISM, which gave a little bit of a bounce to equities as they were kind of heading into there. But for the week, we definitely seen the market give up some of that strength on a percentage basis. Nasdaq down 4%, 5%. But it's really more so when I'm looking at kind of underneath the surface, some of the breadth, right? We're looking at 2-to-1 decliners versus advances in the S&P 500, where it gets really steep and more on the Russell. And the Russell had those real powerful gains at the end of December, but it's a 5-to-1 decliner to advances.
7 minutes. 7 minutes to go.
Pushing their agenda, past jobs, depending on which data point we take. But what if we expand it out to the whole week and include our other data too?
Yeah, well, first we focused on today, Oliver. There really was something for everyone, and you could tell buying of this stuff, not just in the stock market, but also the bond market. Focusing on the labor market specifically on the plus side. And I think why we first saw that down positive was the headline non-farm payrolls and
Okay, nice little bounce coming into the closing bell. Okay, so this area has been negotiated. 4,700. We're green on the day. Cool.
I think what this means going forward for our outlook is not much of a change. We're going to understand that the Fed's probably going to cut rates 3 times. We thought the 5, 6 rate cuts that are actually still being priced in now. Still seem too aggressive. And one of the things
Apple turning up. Apple, a little short covering.
Yeah, we don't think that's likely. After the non-farm payroll report, we saw the odds of a rate cut drop pretty sharply to around 55% or so. They've since rebounded to around 70%. That just seems too strong. When you take a look at the big picture, 56%, that's just too high. I mean, with an unemployment rate of 2.7, wage gains on a 3-month annualized annual basis above 4%. With the economy still kind of chugging along, we don't see the need to cut too soon. So we think mid-year.
All right, well said. So Joe, what have you learned about the market's sensitivity to the pricing of cuts when we went from on net 76 to 66 right now? So we were down to 50, we were down to 20, at the opening bell, but the IT services pushed it back up to 66. So we got a net 10 percentage point drop in the odds of March cut. They're still above 50. What do you make of how everything else traded in accordance with that?
I mean, it's interesting because, like you said, you went from a coin flip, basically, 2/3 probability. And I would tend to agree that I think that still is a bit high, kind of given where we are in the economic cycle. But I think, heading into next week, Oliver, it's the earnings that are going to take center stage. We have earnings and we also have inflation data, CPI and PPI. And so if you look at earnings expectations for Q4, it's about up 2.5%.
Sim integrated. Sim. All right, we got 3 minutes to go. 3 minutes to go. Make sure you double check that you don't have anything expiring in the money today if you don't want to get assigned. Today is January the 5th. Your options, depending on your platform, January 5th. Just check your dates.
Well, that's what the Bulls are arguing right now. That doesn't have to be that way anymore. They're saying the Powell's going to start cutting before we even get to his inflation. Sounds like you wouldn't be a believer of that, Joe.
Yeah, not at this point right now. Like I said, I don't think you see those 5 or 6 cuts unless something is happening in the financial sector or unless you really start to see a big pullback in the market.
Without a major credit event, on what appetite do you think the Fed has shown? Because assessing that going into next week with a bunch of Fed speaking inflation seems pretty important. Like, what's their cut capacity without a credit event, but also without a resurgence in inflation? What do you think is kind of like that baseline we should be operating from?
Yeah, I agree with Joe. The baseline is around 3 cuts. If you look at everything we're seeing now with the economy still strong, the consumer still strong, we're still seeing wage gains. We don't see the need to cut so aggressively unless they need to. And that just doesn't. Now, the flip side is if things do get worse than what the markets are expecting based on our expectations, sure, we could see the Fed cut. We're not seeing that the data right now.
All right, got less than a minute to go. Less than a minute. Have a great weekend, everyone. I have a hard stop. Take care.
If things turn quickly, we can see those rate cuts come to fruition. But we just don't see that right now. One thing that's credit markets and corporations that are really strong.
Okay, what's Bitcoin? There goes Bitcoin. Bitcoin going.
Spreads have risen a little bit lately, but
All right, folks. Have a great weekend. Take care. Have a great weekend. And that's a wrap. Okay. Sunday video will be out about 2 p.m. 2 p.m. Sunday. The video will be out. Be sure to check that out. I'm going to be pretty busy this weekend. Got to work with my daughter to help her get her grades up to an A. So we got a little bit of work to do. I'll be pretty busy this weekend. Take care, everyone. Have a great weekend. We'll see you on Sunday. Ciao.